Open a minute to go until the start of cash equity trading. I'm Tom Mackenzie in London, and here are your top stories. US inflation hits a 41-year high. The Fed's Brainard and Barkin call for quick rate hikes to neutral. Treasuries slip. Dead end. Vladimir Putin says negotiations have stalled. President Biden accuses him of genocide and prepares a new surge of military aid to Ukraine. Plus, Boris Johnson and Rishi Sunak are fined over Partygate after breaking COVID rules. UK inflation jumps more than expected to a 30-year high. Let's take a look at the futures then after the equity market stateside paired some of the earlier gains to end up in the red as investors digested that 8.5% print in terms of CPI. Core, of course, coming in below estimations, but then the commentary from those Fed officials and that debate being highlighted by what we heard from Thomas Barkin, of course, when he said we need to move to neutral versus Bullard speaking to the FT saying you've got to get well above neutral to start to rein in inflation. He's looking at 3% by the third quarter for Fed rates. The FTSE 100 is currently range bound. We had that 7% print, 7% above the estimates for the UK when it comes to inflation and CPI, and just the challenge there underscored for the Bank of England. Currently down 0.3% as we wait for these other indexes to open. The Spanish IBEX lower by 0.5%. The CAC Cajont also lower by 0.3. You saw that rally in oil. It's come off a little bit in today's session, but certainly that was a drag as well on the equity markets yesterday towards the end of the session. And then, of course, we look ahead to the bank earnings. JP Morgan later today and a slew of banks, Wall Street side, which will, of course, tell us more about what's happening in terms of Russia exposure, the higher yields, and what's happening in terms of trading volatility. Let's switch things up and see how things are playing out in terms of cross-asset and the futures, in terms of how things are squaring up for the US day as well after that big inflation picture yesterday. The S&P futures looking to gains of 0.5%, so repairing some of the damage that we saw yesterday across the US equity space. The Japanese yen is one to focus in on. It's crossed now to levels that we have not seen, weakness we haven't seen for 2 decades. Is 130 now in play, currently at 126. That rate differential between the BOJ and the Fed just being underscored again by that commentary and by the inflation picture stateside. The BOJ sticking firmly to its easing policy, currently lower by 0.6% for the Japanese yen. The 10-year, I should say, 2.76. So we saw it cross, of course, 2.8 yesterday. It came off again as investors digested that CPI print. Currently in the today's session, you're seeing yields up again by 4 basis points on the benchmark. Brent in focus, 104, currently softened by 0.2%, but within the context of yesterday's rally, of course, strongly above $100. Also WTI, the last time I looked, above that $100 level as well. But the excitement in the FX markets, we talked about the yen. I know Mark Cudmore, managing editor, of course, for MLive, is very much focused on the FX markets, but also, of course, the consequences, Mark, of that CPI print.
Yes, absolutely, Tom. As I was saying, FX markets are coming to life, and that's partially because what we're seeing on monetary policy side, the monetary policy side ties into the inflation print. We obviously got those incredible prints from the UK an hour ago, just extremely hot inflation across the board, whether you're looking at PPI, RPI, or CPI. But I want to go back to your first story that led the show today, the US CPI print at a 41-year high. We know inflation is a major problem around the world. It is also consensus that it's going to peak in this quarter in the US. That's not a definite thing, but I think most of the market thinks if it didn't peak yesterday, it'll probably peak in the next reading or two. What does matter is how sticky it is and how quickly it comes down from there. And that's where there's a really wide debate. I am in the camp that inflation will stay much stickier than people think for much longer. In the same way that I was pretty suspicious of transitory last year, I think that central banks are still underestimating the inflation problem out there. And one of the charts that I'm using to base my argument is how broad-based inflation is. So looking at this graphic, what this shows you are these bars are the number of items. The blue column shows the number of items where we've seen over 4% year-on-year inflation. The white columns are where we've seen 2 to 4% year-on-year inflation, and the orange columns are where we've seen less than a 2% year-on-year inflation print. And as you can see, last year, or 2020, it was only a few items. That was where inflation was. Only a few items were seeing more than 4%. Inflation wasn't really an issue. Inflation started becoming an issue in early 2021, but still, it was very few items that we were really seeing extraordinary inflation. But that really started to change around the latter part of 2021. Now, the majority of items are seeing more than 4% year-on-year inflation, and because it's broad-based, it's not about one or two issues getting base effects and rectifying. This is a serious problem, entrenching in inflation expectations, changing consumer behavior, changing investment behavior, and meaning that inflation likely stays stickier for longer.
Okay, Mark Cudnor on the stickiness of inflation. Mark, I have to bring up second-hand car sales, because this is something that we've all become experts in just in the last few months. And they came off part of the core picture as well. Second-hand car sales, it was always going to happen, surely, given the run-up that we've seen. Just incredible run-up where you have actually second-hand car sales stateside sometimes costing more than new cars.
Yeah, look, I think this is what's really interesting is we have become experts on second-hand car sales, and that's because last year some people were trying to kind of perpetuate the idea that, hey, it's only about second-hand car sales, it's about a few reopening trades, it's about, oh, some hotels are going back and some travel costs are bumping up. It's one-off issues because of the reopening, or it's just temporary on base effects in oil. It's not, it's everything. It doesn't matter if used car sales come down when services are going higher, your haircut's going higher, your dinner's going higher, your vegetables are going higher. Everything is getting more expensive. And that's why we've got a stickier inflation problem.
Okay, excellent stuff. Thank you, Mark. Mark Cudnor, MLive Managing Editor, breaking down the inflation picture out of the US. We'll stick with that story, of course, and get more analysis now with what is happening in terms of that print data, of course, what it means for the Fed, and, of course, the CPI that we got out of the UK as well. Let's start, Christina Kino, with you and your take on this and the repricing by the markets, cooling off to some extent on the rate hike bets and just how hawkish and how strongly aggressive the Fed's going to go on this because of that focus on core coming in below estimates. Are the market's right to be kind of walking back the expectations just around the margins?
Well, Tom, I think it's always expected that when you get pricing this hot, that there is a point where it just kind of loses steam a little bit. But I think it's very, very premature to kind of base that U-turn in Fed policy just on one core inflation print that came in slightly below estimates. It wasn't even massively below estimates. It was only like less than 0.2 basis points below that median estimate. And so the bigger picture is still that inflation is here to stay. As our colleague Mark Cudmore was pointing out, everything is going higher. And this is why we've seen such strong rhetoric from the Fed. Again, Bullard coming out very strong yesterday, talking about really how the Fed needs to get ahead of this inflation curve because they're already behind. But now I think what markets are looking for perhaps is for the Fed to finally deliver on that rhetoric. We've heard a lot of talk. I think markets now are looking for action, and they're definitely ramping up those expectations for the May Fed meeting.
50 basis points being the consensus now, and if that doesn't come through, if you get less than that, that will be the shock for the markets, won't it? Let's bring in Vincent Jouvin now, Global Market Strategist at JP Morgan Asset Management, joining us on set. Vincent, good morning. Thank you for joining us. What do you make of the inflation print out of the US? Should markets take any comfort from this?
Not really. I would say, to me, and I love the chart, by the way, that you just showed, it's more important that you see the inflation broadening out than the fact that the core inflation really missed the expectation this time. So clearly in the US, it's probably one of the only economy where you see that it's really spreading out to the rest of the economy, to services and some stickier component like shelter, for instance. So clearly in the US, I would say I remain concerned about inflation. I remain convinced that the Fed need to do more in the coming months to really anchor inflation and inflation expectation going forward. By the way, we are at the start of an earnings season. I was looking at the most recent NFIB survey in the US. Really, inflation is now the #1 worry of small businesses in the US, above quality of labor, which has been obviously the main issue so far. So clearly something to address in our view.
Small and large. We had Tesco's coming out mentioning it at least 18 times in their earnings statement earlier today. When it comes to that debate, and Christine mentioned this, the comments from Bullard, look, we know he's a hawk. He's been talking to the FT. He says you need to be well above neutral to start to get inflation down. He's looking at 3% from the Fed by the third quarter. Barkin, though, saying, look, Brainard and Barkin on the other side of the ledger to some extent, saying, let's get to neutral first and then assess where things stand on inflation. Who is going to be proven right on this?
Well, 3% is maybe a step too far in my opinion. The Fed definitely needs to do more in looking at the latest inflation print. That's our view.
Why is 3% too far?
I would say at the moment, current pricing put the Fed fund at 2% by year end. I think inflation is also, we shouldn't forget, self-destroying. So at some point, there's the other question, has inflation peaked? Probably in some ways. Yes, some components are more sticky, but inflation is also self-destroying. So we shouldn't obviously slow too much the economy at the same time in the coming months. So in my opinion, a Fed fund around 2% by year end is something which is in line with current inflation development. So we're looking for 50 basis point rate hike in the coming meeting, and we will need, it will be data dependent obviously for the Fed as for us looking at inflation data. But I'm rather convinced that inflation has probably peaked in some ways, and we see it already for used car and trucks. We may see some relief, hopefully, in the course of the year if we have some form of agreement around the situation in Ukraine. So we may have a bit less tension, hopefully, on oil and gas price. So to me, it's premature to really look at a 3% at the moment.
Okay, maybe starting to peak, at least in some context, the inflation picture. Vincent, you mentioned the earnings. Christine, I want to bring you in on this because we've got JP Morgan reporting later today. What are you going to be watching for from the bank earnings?
Well, it's definitely going to be the first look at how the war in Ukraine has really impacted businesses, Tom. And so it's going to be very interesting to see what their comments are around this. Of course, there was a lot of market volatility, which you would think could be positive for trading revenues. But I think generally things like deal making and just the broader macro picture that would be very important to JP Morgan and really the banking sector in general, that could potentially come out a bit more cautious or even negative. And so it's going to be interesting to see how JP Morgan weighs those factors, how it sees the balance moving forward, and definitely something to watch out for sure.
Yeah, interesting to see the banking sector yesterday, one of the most beaten down despite the run-up in yields that we've seen. We're going to be watching that JP Morgan reporting later today and more of those US banks. Christina Aquino, thank you as ever for walking through some of the key themes. Vincent Jouvin, Global Market Strategist at JP Morgan Asset Management, stays with us. We'll get some of Vincent's calls after the break. Coming up, LVMH sales jump more than expected, talking of earnings in the first quarter. The French luxury goods company warns about the impact of lockdowns in China. We will break down this story next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open. We are 13 minutes into your European trading day. Stocks down, yields up, down across the benchmark about 0.3%. Four sectors in the green at this moment. Basic resources, healthcare, energy and telecoms. Everything else in the red for you. Every major index is lower, most pronounced in Germany. The DAX is down 0.7%. Over in France, the CAC 40 is lower by 0.3%. That brings us on to the luxury space, and LVMH reporting first quarter sales that beat expectations. Fashion and leather goods saw a standout performance, but attention now turns to how it's going to navigate new rolling lockdowns in China. Such a driver, a locomotive, I should say, for sales, of course, and the concern about what it might mean for demand. Joining us now is Bloomberg's Laura Wright, who's been looking at this story, breaking it down for us. Laura, what are the key takeouts for you in terms of the results from LVMH?
Impressive results, Tom. We're seeing that LVMH up in early market trading. Not too much for read across with other luxury names so far. Now, as you mentioned, fashion and leather, a standout division. Organic revenue up 30% year over year, and that was primarily driven from gains Dior and Celine. Now, watches and jewelry, LVMH, they integrated Tiffany at the end of 2020. That has been a successful strategy. It's enabled them to gain more market share. There was an underperformance from wine and spirits because of supply chain disruption, explaining why the division was only fractionally higher, and the unknown headwind of renewed lockdowns in China, albeit the CFO on the earnings call, Jean-Jacques Guioni, said LVMH, they've learned from the pandemic, and he hopes this episode is not protracted.
Okay, what about the macro picture for the luxury sector?
Well, Europe saw the highest organic revenue gains year over year, 45% to be precise, and that is because the European region is focusing on establishing local tourism. Asia, excluding Japan, underperformed because of those lockdowns in China, and the United States is the largest country market, showing robust demand. LVMH, they have pricing capacity as a heritage luxury name. They don't really have to worry about rising oil costs. They can lock in raw materials well in advance. And that really explains why over the last 3 years, LVMH, they've seen almost an 84% share price gain in spite of the onset of the pandemic, in spite of the rise of Omicron, the end of 2021, and Russia's invasion of Ukraine. So all in all, Tom, the analysts remain bullish.
Okay, Laura Wright breaking down the earnings, a decent set of earnings for LVMH, though. How much of a drag will China prove to be, given how important that market is for the luxury sector and, of course, for LVMH? They've been so far able, as Laura's able to say, push up prices and absorb the input costs. Let's just check in on the markets, get you an update on how things are playing out across the sectors. You're currently seeing basic resources as the top standout, getting 0.7%. Healthcare as well. Increasingly, we have guests coming on the show saying healthcare is a play that you want to be in as a defensive sector. At the bottom list, you're looking at retail. Let's bring back Vincent from JP Morgan. Vincent Jouvin, Global Market Strategist at JP Morgan Asset Management. I want to start with the luxury sector and the linkages to China, because it concerns me that maybe there isn't enough focus on what is happening. I've been speaking to people in Shanghai. I was based in China. I know how important that market is for the luxury sector, and the lockdowns are significant. Are we underestimating the European corporate impact of what's happening in China?
No, I don't think so. We look every day at the data, and I thank my colleague in Shanghai Shopping, which update me every week on that as well. And we see that the economic data and that the consumption data in China are not going into the right direction, which is what you would expect in such a situation. Good to hear from companies such as LVMH that they're concerned as well. So, which is obviously an issue, especially given the intention of the government to reach this 5.5% growth this year. So, to me, let's say, when I try to combine both, yes, we have a weak situation at the moment, driven by the zero COVID policy, but at the same time, you have the policymaker in China, which remain committed to achieve a very high growth rate this year. So, let's say we could turn this very negative story into something somewhat more positive. We have seen that the PBOC at the end of last year lowered rates. They can still do it. China is one of the few countries which doesn't really has an inflation issue, so we would expect more from the PBOC, more from the fiscal policy. Li Keqiang has been rather clear for local authorities in China, asking them to do more to cushion the economic impact of COVID policy. So at the moment, it's a very difficult situation. We're looking at very fragile first and maybe second quarter, but to economy to get some traction maybe in the second part of the year, thanks to policy measure deployed by them.
Okay, continue to watch policy measures out of China. What is the defensive nature of the US market at this point?
Return on equity much higher than everywhere in the world. So we have upgraded, or we have maintained an overweight position in US market.
Valuations don't concern you?
Valuation are less concerning than at the start of the year, obviously, given the negative performance of the market year to date. I often say US market is priced for perfection, but it offers this perfection when you look at the return on equity, when you look at the resilience, when you look at the volatility. We want to lower the volatility level in our portfolio. The VIX is usually much lower than the VDAX, for instance. And in this very fragile environment, we have a lot of uncertainty on inflation, like we just discussed earlier on. Still geopolitics. We see that negotiations between Russia and Ukraine are not heading anywhere at the moment. In uncertainties around rate, we are looking for quality asset, defensive market, and clearly the US continue to stand out in this context. And for us, European investor, we have as icing on the cake, obviously the dollar, which comes on top of it, and which is obviously an additional source of return.
Yeah, the continued strength of the US dollar. And we look, of course, and we switch our attention to the earnings picture out of the US, particularly the banking sector later today. Such a stellar year last year for the banking sector, 2021. Does that continue in the environment that we're in, or does that leg start to fall off for the banking sector?
Obviously, trees don't grow to the sky. We all know it. So we know that after a couple of good years, some more challenging period would come. And it will be a more challenging year for the financial sector. The uncertainties that we just discussed make that we see less deal making, less IPO, less activities for investment bank. That's definitely a headwind. This said, at the same time, we see also many tailwinds, such as rising interest rate in the US and globally, which would boost, obviously, net interest income. It's obviously not the tide which will lift all boats together, given the headwind on the investment bank side. So, which is why, obviously, we are active portfolio managers. We need to look in the banking sector, those indeed who generate most of the revenue at the moment through their lending business, through their loan business. They will probably be better off than the rest. At the same time, looking at the global economy, and especially at the US economy for US bank, we're still looking at an economy which shows a healthy growth level, where consumer and corporate balance sheet are healthy, which from a bank perspective is also a rather healthy environment to operate, obviously. So at the top-down level, we remain positive on the banking sector. More generally, on the value side of the market, given this rising interest rate, we continue to believe that that's the way to go for investor in the coming weeks and months.
Vincent Jouvin, thank you. Good morning. Thank you for coming into the studio and give us a preview of all things in terms of what's happening in these markets, and of course, a look ahead to the bank earnings that kick off in earnest later today. Vincent Jouvin, global market strategist at JP Morgan Asset Management. Coming up on the show, President Biden accuses Putin of committing genocide in Ukraine in a major escalation of his condemnation of Russia's invasion. More on that next. This is Bloomberg. Welcome back to the European Market Open. Let's focus in now on the latest from the war in Ukraine. US President Joe Biden has, for the first time, accused Russia of committing genocide in Ukraine. His comments mark a major escalation in his condemnation of Moscow's invasion. For more, we're joined by Bloomberg's executive editor for international government, Ross Matheson. Ross, what is the significance of the verbiage of the US president, the use of the word genocide?
Well, certainly already the US president has called the Russian president a war criminal. He said that Russia has committed war crimes in Ukraine, but genocide is a much broader designation. It really represents the suggestion that Russia is looking to wipe out a large number of people in Ukraine. And it also enables a broader jurisdiction in terms of possible international criminal action in the international courts. It enables national countries to also potentially take their own action against Russia. So it can set off a whole formal series of events if, in fact, it's legally defined as genocide. And it also just gives the US president impetus for his push to send further weapons, and particularly more heavy weapons, offensive weapons, to support Ukraine. It sort of and that helps facilitate the argument that Ukraine is really under siege, to the point that the US and other nations now need to provide those kinds of weapons into Ukraine, where they've been reluctant, of course, to do so previously, because their concern in doing so is that does that bring US and other countries into direct conflict, confrontation with Russia. So that's probably behind all the thinking on that on the part of the US president overnight.
Roz, just briefly talk to us about the preparations being made for what could be a major battle in eastern Ukraine.
Well, we're certainly seeing Russian forces continue to mass in the eastern areas of Ukraine, across what's known as the Donbass areas, down towards the south, and of course the southern eastern port city of Mariupol that's been under heavy siege for weeks now. So we're seeing Russian troops and of course their equipment really redeploying from the areas around the north. There's very little activity on the part of Russia now occurring in those areas. So they're really concentrating their forces there. The question is, does the Russian president want to start a really big offensive in that area ahead of May 9, which is, of course, the Russian Victory Day in World War II. So that's the date that people are now saying that we all need to look for.
Roz Matheson, executive editor for international government, thank you for getting us up to speed on the situation in Ukraine. We're going to be talking about the plight of Boris Johnson, the fact that he's been fined by the British police, what it means, of course, for the future of the UK Prime Minister. Stay with us. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modelizaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 30 minutes into your European trading day, and here are your top stories. US inflation, it hits a 41-year high. The Fed's Brainard and Barkin call for quick rate hikes to neutral. Treasuries slip. Dead end, Vladimir Putin says negotiations have stalled. President Biden accuses him of genocide and prepares a new surge of military aid to Ukraine. Plus, Boris Johnson and Rishi Sunak are fined over Partygate after breaking COVID rules. UK inflation, meanwhile, jumps more than expected to a 30-year high. Let's check in on these markets. It's a FTSE 100 that is just gaining about 0.1%, a little bit range-bound broadly across these markets, down 0.1% for the benchmark, looking for some kind of catalyst. We did have that inflation print out of the UK. 7% above the estimates, and as we said in the headlines, at a 30-year high. Again, just underscoring the challenge for the Bank of England as it faces up the cost of living crisis, but these very high inflationary prints. The FTSE 100 gaining just under a 0.1%. The DAX is lower by 0.5%. We have some corporate stories around Tesco's and LVMH. That is playing into the mix as well as we square up to the earnings season. JP Morgan reporting from the banks later today, and then we get a broader look at the US banking picture. Let's change it and see how things are playing out across these sectors then. Again, on the back of the commentary that we heard from the US and those Fed officials, Bullard on one side of the ledger speaking to the FT saying you have to get well above neutral to get inflation down. Brainard and Barkin, though, saying let's get to neutral first and then reassess. In terms of these sectors, you've got basic resources up about 0.9%. You saw that rally in oil yesterday. Healthcare is up 0.7%. At the bottom of the list, you've got retail down more than 1%. Let's talk about what is happening then in the UK. You've got inflation, but also the political scandal rearing its head again around the Prime Minister, his wife, but also the Chancellor of the Exchequer. Boris Johnson has become the first sitting UK Prime Minister, the first one to be sanctioned for breaking the law. Yes, he has broken the law after the police fined him for attending a rule-breaking gathering during lockdown.
It did not occur to me that this might have been a breach of the rules. But of course, the police have found otherwise, and I fully respect the outcome of their investigation. I've paid the fine, and I once again offer a full apology. It's my job to get on and deliver for the people of this country, and that's what I'm going to do.
Joining us now is Bloomberg's UK economy reporter Lizzie Burden. Lizzie, how big a threat do these fines pose for Boris Johnson? Before the war in Ukraine, we spoke to MPs and they said, look, if he gets fined, if he becomes the first Prime Minister to face this kind of legal action, that's it, he's done. But it's a different equation now.
It is. You took the words out of my mouth, Tom.
Just I apologise. You've got a lot more to fill out, I'm sure.
Yeah, just a few weeks or months ago, it would have been a different situation. His most likely successor, Rishi Sunak, the Chancellor, is also embroiled in this scandal. He's had a fine, but on top of that, he's been criticised across the political spectrum for not doing enough on the cost of living crisis, and his wife's tax affairs have come into the spotlight. So with him looking pretty bad, at the same time, Boris Johnson's popularity having a bit of a revival because of the war in Ukraine, Boris Johnson seems to be clinging on for now, but we'll see the real damage to public trust at the local elections next month.
OK, so there's May elections in focus in terms of the political fallout, potentially, for the Conservative Party, the ruling Conservative Party and Boris Johnson. Talk to us about the inflation print. 7%, it came in above estimates. How significant is this? Are we starting to see a peak? And what are the challenges for the Bank of England?
Yeah, this is above economists' expectations for the 6th month straight now. And it's a rise across the board. It's not just food and fuel, as we'd have expected from the war in Ukraine. It's also clothing, footwear, household goods, furniture, all the things that the poorest households need to buy. So it deepens the cost of living crisis, which threatens to derail the economic recovery. It adds to the government's political nightmare. And then looking ahead, said, the Bank of England had said that inflation would spike at 8% in April. That was before today's print, so probably higher now. And it had said that it could reach double digits later in the year. So we'll have to see whether Ofgem, the energy regulator, raises the energy price cap in October, because that'll be a big telltale.
All these different factors. I mean, we'll talk about all the different central banks and the challenges they all face, and some of those are idiosyncratic to those particular regions. But the BOE's challenge is acute.
It is. So the jobs data yesterday added to the ammunition for another fourth back-to-back rate rise from the Bank of England in May. The question I'll be asking today is whether this print for inflation opens the door to a 50 basis point rate rise. After that, though, Bloomberg Economics' base case is that the bank will hold off the tightening because inflation is going to get so high that it will start to weigh on demand, slow down the recovery and tame itself. But there is the risk that the labour market gets so tight, inflation expectations become de-anchored, that the bank has to continue tightening in the second half of the year, albeit at a slower pace.
OK, Lizzie Burden, thank you very much indeed for breaking down the political scandal engulfing the Prime Minister, the Chancellor and the Prime Minister's wife, and of course the inflation data out of the UK as well. Silvia Dell'Angelo, Federated Elmez senior economist, joins us now for more on inflation, not just in the UK but the US as well. Silvia, good morning. Let's start with the UK. Where does this leave the Bank of England?
Well, as Lizzie said, obviously the Bank of England is in a very awkward position right now. They are facing inflation running at a 30-year high. Also, at the same time, the labour market is quite tight, which means that it's like an environment that could lead to a price-wage spiral. And so for the time being, really, the Bank of England will remain in a tightening mode, firmly tightening mode. And of course, there is a risk also of a 50 basis point rate rise at their upcoming meeting in May. That said, the sort of inflation we are seeing is like cost-push inflation and will weigh heavily on demand. And so we also see some slowdown in the UK economy in coming quarters. And that means that the Bank of England will really have to walk a very fine line, balancing the growth risk and the inflation risks.
Take us through, Silvia, look ahead to 2023 and how you start to assess the forecasts for the UK economy. What are the recessionary risks for the UK as things stand as you look out to 2023?
Obviously, I mean, the UK, like other countries, was subject to this stagflationary shock from the war in Ukraine, which came on top of an uncertain recovery from the pandemic. Uncertain meaning that all the underlying trends for economic activity, for the labour market in particular, were quite uncertain. And as it stands, well, there is like a significant risk of a recession next year. It's not my base case yet, given that we have seen some stabilization in the situation in Ukraine. And the assumption here is that there will be no escalation going forward. But of course, it's a very fragile environment.
We've got the ECB on Thursday, tomorrow, with their decision. Why on earth is the Central Bank of Europe still buying bonds?
Well, as a matter of fact, they plan to end net purchases in Q3, of course, if their baseline scenario plays out. And also, they are planning a very sharp reduction in net purchases in coming months. So they are clearly uncomfortable with the current extremely accommodative monetary policy setting, and their baseline is still one of gradual normalization of monetary policy in coming quarters. And I think that, again, if the situation stabilizes and if growth holds up in coming quarters, their plan is really to lift off in Q4 and possibly as early as September. And so they're probably quite happy with the current market pricing, showing basically a couple of rate hikes later in the year, and the deeper rate basically going back into slightly positive territory early next year.
Okay, and the market's continuing to readjust to that. I'm looking at Italian BTPs, the 10-year, the yield up 8 basis points in the session today. German Bunds as well, on the 10-year up 5 basis points. What is the vulnerability of European peripherals as the ECB makes that shift, Sylvia?
Well, I think the ECB is very aware of this fragmentation risk, and so the risk that yields in peripheral countries spike as the policy rate and in general monetary policy becomes less accommodative. And so basically the ECB, and in particular the President Lagarde and the Chief Economist Lane, have suggested that they are working on a special risk and basically buy sovereigns and also corporates, if necessary, to basically allow for a smooth process and to avoid like stress in financial markets. However, I don't think that they will announce anything at their meeting tomorrow. And also it's a very tricky task as the ECB has very strict rules in terms of avoiding debt financing for sovereigns. So obviously there is this big risk. The ECB is aware of this. They're working on it, but it's not like an easy task.
Sylvia, what are you monitoring when it comes to financial conditions as we look to the US and the increasing vocalization of that desire to start running back the balance sheet? And we've got May, June potentially on the cards for the reduction of the US balance sheet and the read across then to the financial conditions.
Obviously, as already said, the Fed is quite behind the curve in its fight to inflation, and it has clearly signaled that they will ramp up their rate increases over the next 2 meetings, while also starting using their balance sheet to basically withdraw stimulus from the economy. I think that so far the market has really bought into this Fed's narrative, and financial conditions have already tightened. In particular, I would focus on mortgage rates because that's the most obvious channel from monetary policy to the real economy. Market rates have already picked up quite significantly, which eventually will drag on the housing sector and so on domestic demand. And really at this point, the Fed just needs to follow through on what they have already hinted at.
Okay, on the need for the Fed to follow through, continue to watch the mortgage rates as an indicator of the tightening of financial conditions. Sylvia Dall'Angelo, Federated Hermes Senior Economist, thank you for your insights this morning. Okay, coming up, we're heading into first quarter earnings season for US banks. That's later today. We've got more on that next. JP Morgan kicking things off. This is Bloomberg.
Of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the European Market Open. We are now heading into earnings season for the largest US banks. JP Morgan kicking things off later today. Investors will be focused on how market volatility caused by the war in Ukraine has affected its investment banking and trading operations. Bloomberg's Charlie Wells is here to break down what to expect ahead of those numbers. Charlie, how exposed are US banks to Russia?
You know, they're not as exposed as you might think, which will probably reassure investors. But as we go into this earnings season, I think it's really important to listen for two stories. So there's one story that we've been hearing most of the quarter, which is that large U.S. banks feel that they need to get out of Russia. They are getting out of Russia. You know, there isn't as much exposure as you might think. JP Morgan, Bank of America, Russia isn't even their, top 20 market. But there's a second story that I think we really want to listen for in these calls this week, which is about how the secondary impacts of this war could impact the bottom line for these banks. How have they been positioning themselves with commodities trading? How have they been positioning themselves with asset management, with wealth management, which could potentially change quite a bit in light of this conflict?
Okay, interesting. So look for those secondary effects when you're pairing these bank earnings. When it comes to the Fed, and we've been discussing the latest CPI print and the commentary out of Fed officials, the risks there for the Fed, higher yields, higher rates, traditionally better for banks. What is the read across?
All right, so there's sort of a Goldilocks problem here, I would say. So effectively, if the Fed moves too slow for these banks, they do not get that net interest income bump that they've been talking about for months now, right? Although if they move too fast, we potentially get slower growth, which is not great for banks, and potentially a recession, which is even worse for banks. So it's a really delicate dance that the Fed's got to do, but interest rates are a very blunt tool. So as Jamie Dimon said last week in his letter to shareholders, I do not envy the Fed.
Okay, Charlie Wells, great stuff leading up to those earnings with JP Morgan kicking things off later today. We've got a redhead crossing the terminal right now. This is not the banking sector, it's the telecom sector. Deutsche Telekom buying SoftBank shares in T-Mobile. This is for $2.4 billion US. The share price of Deutsche Telekom just up 0.8%. We'll get more details on this story as and when they come through. Deutsche Telekom buying SoftBank shares in T-Mobile for $2.4 billion US. And there you have SoftBank as well, up 2% on the back of that news. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. President Vladimir Putin says peace talks with Ukraine are at a dead end and vowed to continue Russia's invasion. There's been no word of progress for days in video-linked talks after Ukraine accused Moscow of carrying out war crimes, including killing unarmed civilians. Putin called the claims fake and said the war in Ukraine is going according to plan. The New York City Police Department has identified a person of interest after a chaotic rush-hour shooting at a subway station. Bloomberg's Kriti Gupta sent this report.
Tuesday morning in Brooklyn, New York, a gunman opened fire in a subway station after releasing 2 smoke canisters, injuring 23 people, including 10 with a gunshot wound. Luckily, there were no fatalities. At the scene of the crime, authorities found a 9mm handgun, 2 undetonated smoke grenades, and a hatchet, among other items. The New York Police Department has identified a person of interest based on keys to a rented U-Haul van found at the scene. The manhunt is ongoing. Kriti Gupta, Bloomberg, New York.
Shanghai has posted a new daily record for COVID cases. Chinese television said the city saw 26,330 new infections on Tuesday, up from around 23,000 the day before. While curbs have been eased in some areas, the majority of the city remains under a tight lockdown that bans even outside exercise or shopping for essential items. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, thank you. Okay, coming up on the show, Germany planning to grant itself powers to put critical energy infrastructure under temporary state control. That's to prepare in case of a severe energy crisis fueled by the war. We'll get the details on that next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We are 52 minutes into your European trading day, checking in on what's happening across the sovereign space. You've seen a run up again in yields in the session today. A 6 basis point move, as you can see on the benchmark German Bund at positive 85. The OATs, the French 10-year yield, up 6 basis points. And then the BTPs over in Italy, 2.49 is what you're getting on your Italian BTP, up 8 basis points, again reassessing the inflationary impacts and what that may mean for the ECB, again on the back of what we saw yesterday, the read across from the Fed to the Eurozone. Okay, sticking with the Eurozone, German industry CEOs have met with Chancellor Olaf Scholz amid growing concern over the fallout from sanctions targeting Russian energy supplies. It comes as the government is reportedly planning to grant itself powers to put critical energy infrastructure under temporary state control. Joining us now is Bloomberg's Western Europe executive editor, Chad Thomas. Chad, what did Scholz then, the Chancellor, and these German CEOs discuss in the meeting? What details do we have?
Hi, Tom. Well, that meeting took place last night at the Chancellery here in Berlin. It was the first time that Chancellor Scholz has met with CEOs since the war broke out, and the real topic of discussion was energy. It was oil and gas and what would happen if there was a cutoff of the gas supplies to Germany. Of course, Chancellor Scholz really is in a bit of a pinch here. On the one hand, he's being pressured from folks outside of Germany to do more to cut off the oil and gas supply coming from Russia, Ukraine, accusing Germany of basically funding Putin's war. On the other hand, these CEOs, and they reinforced it in their meeting again last night, said that if Germany were to cut off, in particular, gas from Russia, they get about 40% of their gas from Russia, would have dire consequences for industry. So that was really one of the key things they talked about. They also talked about crunches in the supply chain and the impact on production here in Germany as well.
And that debate amongst economists continues around just how severe the economic impact would be if Germany went down that route. But the German government is putting in place, or is looking at least, to put in place new laws to secure energy infrastructure. What is the rationale behind this?
Well, that's really interesting because, of course, this is the sort of thing that one would often associate, say, with France, with the government really stepping into a critical industry. But basically, Germany is concerned about the energy infrastructure. They actually took control of a Gazprom unit a week ago out of concern about the supply coming from that unit. And they're now looking at a change to German law that would make it much easier for them to do these sorts of measures with other companies within Germany if they needed to do so to secure the energy supply in the country.
And Chad, some, at least the Italians, looking to Algeria potentially as a source of gas. Spain having different ideas. What's going on there?
Well, that's really interesting. It shows how everyone now is searching for alternative energy supplies as this war plays out. Italy is also very dependent upon gas from Russia, and so they signed a deal this week with Algeria to get gas supplies from them. This has ruffled feathers a bit in Spain because Spain gets quite a bit of gas from Algeria as well, and they're concerned now that if there's more gas flowing into Italy, that could eventually impact the flows to Spain. Spain and Algeria have also been having rather heated discussions really about the price that Spain should be paying for gas. And so you just see how the jockeying that is now taking place in Europe as everyone scrambles essentially to replace the supplies that they've all been reliant upon from Russia for so long.
Yeah, fascinating, those tensions emerging between allies and fellow members of the Eurozone as they try and readjust again to that changing energy complex. Chad Thomas, thank you for breaking that down for us. The European markets, you're seeing range-bound, essentially looking for additional catalysts in the European markets. Future stateside, looking at the S&P E-minis up 0.6%. The Nasdaq futures looking at gains of 0.8%. Across your bond markets, the sell-off continues. Yields are up. That is it for the European market open. Surveillance Early Edition is up next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm doing everything within my power by executive orders to bring down the price.
Most notably, of course, a very aggressive, historically significant release of barrels of oil from the strategic reserve.
That's going to dictate a lower inflation rate as we go through into the second half of the year.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance, the Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Here's what's coming up on today's program. U.S. inflation hits a 41-year high. The Fed's Brainard and Barkin call for quick rate hikes to neutral. And in the U.K., the inflation print hits a 30-year high of 7%. The Bank of England is on course to raise interest rates for a fourth time in May. Joe Biden escalates his condemnation of Russia's invasion of Ukraine. The U.S. president accuses Vladimir Putin of genocide. And stay with Bloomberg Surveillance Early Edition as Finland and Sweden draw up plans to join NATO. This hour, we're going to be speaking to the man who oversaw Estonia's accession to the alliance, former President Thomas Hendrik Ilves. Send in your questions, IB plus TV Go. Well, let's check in on your markets on this Wednesday morning. We are seeing European stocks basically flat this morning. A lot of churn underneath the surface. We're seeing things like energy materials. Those are doing better. I have Brent crude on the board down 0.1%. A lot happening in oil. We're also getting some breaking lines from the IEA. They've cut their oil demand forecast because China has reimposed lockdowns. So that means lower demand. This question is, as we see the IEA members putting up output, does it necessarily need to happen if we are heading towards a situation where the Chinese economy is slowing? And of course, we will be speaking to the IEA shortly as well. So here's where you're looking at on your UK 10-year yield, just to run you through the other assets, up about 8 basis points. That comes after that hot inflation reading, 7% in the UK. And the yen, 20-year low versus the dollar. This is a currency that continues to get pummeled. It is that yield differential. Here's your map in Europe. Here's where some of the churn underneath the surface, you can see it. France outperforming, some solid earnings from LVMH, lifting a lot of the luxury good stocks in that country. I was saying before, energy and materials, those are doing well today. So we're looking at the FTSE 100, also up 0.1%. Elsewhere, it's a little bit of a soggy day. The DAX is down, FTSE mid barely changed, IBEX barely changed as well. Of course, sort of underlying this entire picture are the U.S. inflation readings we got yesterday. It was the hottest since December 1981, and that reinforced the need for the Fed to follow through on its aggressive rate hike plan. We're joined now by Gurpreet Gill, macro strategist for the fixed income team at Goldman Sachs Asset Management. Gurpreet, great to have you on the program this morning. So yes, it's just one figure yesterday, but does your forecast change? Does your outlook for where inflation goes from here alter at all, given the reading we had yesterday?
Hi, good morning. Well, it's great to be with you. I would say the outlook for us and also for the Fed is not going to change by one particular inflation print. We did see a moderation in used car prices, which has been particularly volatile, and it was the first inflation miss relative to consensus expectations since last August, and the first moderation in the monthly pace in 6 months. And so the market did take some comfort from that. But I would say if you look at measures like the Cleveland Fed's trimmed mean measure, which omits any outsized price moves in either direction, that was still firm. You still see firmness in shelter inflation and still firmness in core services. And it's that is really going to drive the Fed outlook from here. And importantly, the Fed is going to be more focused on the speed at which inflation is not only moderating, but moderating back towards target. There's 4 key things that we monitor in terms of the outlook from here. The first is the trimmed mean measures, so what I mentioned, those measures of inflation that are taking out any outsized moves. The second is shelter inflation. That has been firm due to a healthy labour market and tight inventories. But looking ahead, an increase in apartment supply, any moderation in wages could help temper inflation there. The third most important factor is what's happening with wages and the labour market. There we do have a very tight labour market. There's no question about it. You are seeing income growth across all income quartiles. But surveys do suggest that wage growth is going to moderate from a healthy 6% back towards 4%. You could also see an increase in labour supply, which could help temper wage growth. And then finally, inflation expectations. And these matter insofar that they are forming wage demands. And their inflation expectations are still elevated, but they could start to moderate as you see commodity prices moderate and as the Fed cycle gains traction.
Gurpreet, to that point of inflation expectations, I mean, survey after survey we see have inflation expectations extremely high and just global outlook for the economy very low. We had the NFIB survey for the U.S. yesterday. Prices record high, outlook for the economy a record low. To what degree is this a self-fulfilling prophecy where this gloom about the economy will lead to some serious issues heading forward?
Yeah, I think when it comes to the formation of inflation expectations, there are some behavioral factors at play, something called frequency bias. We are shaped and informed by what we are spending money on the most, and so food and fuel. And those prices tend to be driven by what's happening in global developments. We have started to see commodity prices moderate. At the same time, the Fed hiking cycle could begin to influence interest rates for mortgages and the housing sector. That too could help temper inflation expectations, which is important for the broader inflation environment.
All right, Gurpreet, stick with us. Much more to cover. That's Gurpreet Gill from Goldman Sachs Asset Management. Now let's get to the Bloomberg First Word News. With that is Leanne Gerrans. Good morning, Leanne.
Good morning, Danny, and thank you. President Vladimir Putin says peace talks with Ukraine are at a dead end and vowed to continue Russia's invasion. There has been no word of progress for days in video-linked talks after Ukraine accused Moscow of carrying out war crimes, including killing unarmed civilians. Putin called the claims fake and said the war in Ukraine is going according to plan. Meanwhile, President Joe Biden has for the first time accused Russia of committing genocide in Ukraine, significantly escalating his condemnation of President Vladimir Putin's invasion. This comes as the U.S. is said to be readying further military assistance worth $750 million for Kyiv. Ukraine has repeatedly asked allies for more weapons as it braces for a new offensive by Russian forces in the east of the country. Here in the UK, Boris Johnson has become the first serving Prime Minister to be sanctioned for breaking the law after the police fined him for attending a rule-breaking gathering during lockdown. The Chancellor Rishi Sunak was also found to have broken the rules in attending the event at Downing Street in June 2020. Opposition Labour Party leader Keir Starmer said they had repeatedly lied to the British public and is calling on them to quit. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thanks so much. Coming up on the program, the IEA cuts its oil demand forecast as China reimposes lockdowns. We're going to be speaking to the IEA's head of oil markets, Toriel Bosoni. Send in your questions, IB plus TV Go. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. The International Energy Agency has lowered its forecast for oil demand. It says measures to curb the spread of COVID in China are a major reason for the move. Now, for the rest of the year, it sees the world using 260,000 barrels a day less than it had previously forecast last month. It also sees a sharp drop in Russian oil supplies, and this, of course, as Vitol, the world's top independent oil trader, says it plans to stop trading Russian crude and products by the end of the year. We're joined now by Toriel Bersoni, head of the IEA's oil market division. Toriel, thanks so much for joining us this morning. So a downward revision in global oil demand. This, of course, comes off the back of oil supply rising from non-OPEC countries. As we look forward in the year with the risk of recession, is there a risk that the market flips from undersupply to oversupply, again, given economic slowdown?
Yes, good morning. No, of course, this month we lowered our forecast for world oil demand by 260,000 barrels a day, and this follows mostly the lockdowns in China. But already in last month's report, we made a much bigger revision to our oil demand outlook stemming from higher prices, lower economic growth. And we're seeing now that economic forecasters continue to downgrade their outlook for the world economy. And obviously, this will have an impact on oil demand. But oil demand is still recovering from COVID, so we are expecting growth of nearly 2 million barrels a day this year. It's slower than what we saw last year, but the aviation sector is recovering. There's pent-up demand, so we are expecting growth, but obviously a downside risk if the economic outlook deteriorates further.
Right. And of course, feeding into this, you have the input now, the prospect, or rather the reality of war. Now, among this, as I was mentioning before, Vitol said that it plans to stop trading Russian origin crude once its contract weighs out. And given the self-sanctioning we are seeing towards Russian crude, do you expect Russia to cut its own input and output rather? And if so, how much?
Thank you. No, so our forecast, I mean, there's a lot of uncertainty about the Russian production outlook, but we're seeing not just Vitol, but major oil companies, especially in Europe, stepping away from Russian oil, stopping buying altogether, and Total, BP, Shell, many other companies and traders. So our expectation is that Russian oil supply could fall by 3 million barrels a day starting from May. We're already seeing output falling nearly 1.3 million barrels a day from the March average. Domestic demand in Russia is always also falling. The sanctions, the economic outlook has been downgraded. So refineries in Russia are lowering runs. They have difficulties placing some of the products. So we're already seeing Russian output falling. How far it will fall will depend on the international community's reaction, sanctions, possible embargoes expanding, and just the reluctance of buyers internationally to take the Russian crude. Our forecast is that we could lose up to 3 million barrels a day.
Of course, this comes off the back of the IEA members releasing more oil, the U.S. really leading that drive as well. Does that mean that there's less of an impetus now for OPEC Plus to increase their output?
So we're seeing OPEC Plus scheduled to continue to increase production through the end of the year, and then we're factoring this into our balances. So now, while our oil market balance look more or less in supply, lower demand, higher supply, and with the additional barrels from SPR releases from IEA member countries and from the US in particular, the market does look more balanced. But we have to remember that oil demand continues to grow this year, and we're going into the year, even before the Russian war started, with record low inventories. OECD inventories are more than 300 million barrels lower than they were the 5-year average. So the market is very tight, and with all the uncertainty on both the demand and supply side, the SPR releases go some way to create comfort for market, but there is a need for OPEC Plus to continue to increase production as demand grows through the rest of the year.
Tariel, is there a concern then, because this has been a call from the IEA to OPEC, and OPEC, of course, has disagreed with those calls, has resisted those calls. Are you troubled by any sort of hint here of a breakdown between relations of the IEA and OPEC?
No. The way we put forward our market balances. What we've seen, what we pointed to is that demand has surpassed supply for the best part of 18 months. Inventories have continued to fall. So we have seen an imbalance in the market. Of course, inventories were high after the COVID lockdowns in 2020. So we're just pointing to the fact that there was a need for more supply to the market. There has been. Inventories are low. That's creating a lot of volatility. Volatility is not good for markets. Higher prices is feeding into inflation. That's not good for consumers nor producers. And I think we will continue to put forward our markets and our call. But as I said, the market does look more balanced for 2022 as we see it now.
Okay, Tariel, I'm afraid we're going to have to leave it there. Thanks so much for joining. That's Tariel Bassoni, head of the IEA's oil market division. Now, coming up on Surveillance, Britain is in the teeth of an inflationary surge. Latest CPI data showing that the squeeze on consumer spending power is set to intensify. That next, this is Bloomberg.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, annual inflation in the UK surged to 7% last month. That's a fresh 30-year high that threatens to worsen a cost of living crisis. Joining us now is Bloomberg's economics reporter, Lizzie Burden. Lizzie, so break down the numbers. What's driving this inflation, and does the peak look like it's in sight?
Well, interestingly, this was the 6th straight month that it's beaten economists' forecasts, and it's a rise that's across the board. It's 75% of items in the inflation basket went up in price compared to 25% this time last year. So it's not just a big rise, it's a broad one. It's not just food and fuel prices, as you'd expect with the war in Ukraine. It's also clothing, footwear, furniture, household goods, all the things that the poorest households need to buy. So it deepens the cost of living crisis, potentially could derail the economic recovery, and adds to the political nightmare for the government. The worst thing, though, is the peak is yet to come. Before this print, the Bank of England had said that inflation could spike at 8% in April because of the rise in the energy price cap. That could be higher now. And the bank had said that it could hit double digits later this year because the energy price cap could go up again in October.
So what does this mean for the BOE then?
Well, yesterday's jobs data had added to the ammunition for a 4th back-to-back rate rise in May. The question I'll be asking economists today is, does this open the door to a 50 basis point rise in May? Bloomberg Economics says beyond the May hike, the likelihood is the bank will pause the tightening because inflation will get so high that it could weigh on demand, slow down the recovery, and inflation tames itself. But there is the risk that the labour market gets so tight, inflation expectations are derailed, and the bank has to continue hiking beyond May, even if it's a slower pace.
Lizzie, thank you very much. That's UK economy reporter Lizzie Burden breaking down the numbers for us. And Gurpreet Gill from Goldman Sachs Asset Management is still with us. Gurpreet, I'm going to steal one of Lizzie's questions because I think it's really pertinent right now. Does this open the door to a 50 basis point hike from the BOE?
Yeah, it's a great question. That is not our base case at this juncture. The Bank of England is actually more advanced in its hiking cycle than other central banks. It kickstarted that cycle back in December with a 15 basis points rate hike. It's since done 2 25 basis points rate hikes. So we don't think it's going to follow the RBNZ that we saw in New Zealand this morning in delivering a 50 basis points hike. We also expect the Bank of Canada to deliver a 50 basis points hike later today. And of course, the Fed at its next meeting and perhaps the meeting after that. By contrast, we think in the UK, we will see another 25 basis points rate hike at the early May meeting. After that, we, like your Bloomberg economists, were expecting the Bank of England to engage in a pause in its hiking cycle as that inflation squeeze started to take hold. But if we don't see any turn in the labour market data, which so far is remaining resilient, then we do think you could see another 25 basis points rate hike at the Bank of England's June meeting.
Gurpreet, to what degree are you preparing for stagflation in the UK?
Yeah, Yeah, it's a good question. We don't see it at the moment in the data in that growth is holding up. But that being said, we've had limited hard economic data since the onset of the war in Ukraine. The soft data, so survey data, the manufacturing PMIs, those have started to moderate. When you look under the hood at the components, the new orders components, which are a better leading economic gauge, those have started to moderate. So stagflation is surely a risk in the UK and also to some extent in the Europe relative to the US.
I do think this question of what the ECB does amid most central banks, perhaps save for Japan, starting to hike, what they do in this process. I was talking to Carson Bresky of ING earlier, who said that the ECB needs to wait given the impact of war is really unknown at this point. Briefly here, Gurpreet, would you agree with that sentiment?
Yeah, it's a good point. There is greater uncertainty in Europe, and the ECB is faced with this difficult balance at the moment of intensifying medium-term inflation risks and the downside growth risks. At this Thursday's meeting, we think the ECB is going to be more focused on the intensifying inflation risks because that's where there is greater uncertainty at the moment. On the growth front, growth is expected to weaken. You are seeing that in the leading economic indicators, like I mentioned, the new orders components, the manufacturing PMI, sentiment has come off quite sharply. But at the same time, a lot of those indicators pertain to the manufacturing side of the economy. The labour market is still healthy and the services sector is still strong. So we do think the ECB will normalise policy this year.
All right, Gurpreet, thanks so much. That's Gurpreet Gill, macro strategist at the fixed income team at Goldman Sachs Asset Management. Coming up, President Biden accuses Putin of committing genocide in Ukraine, a major escalation of condemnation of Russia's invasion. That's next.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
U.S. inflation hits a 41-year high. The Fed's Brainard and Barkin call for quick rate hikes to neutral. In the U.K., the inflation print hits a 30-year high of 7%. The Bank of England is on course to raise interest rates for a fourth time in May. Joe Biden escalates his condemnation of Russia's invasion of Ukraine. The U.S. president accuses Vladimir Putin of genocide. And stay with Bloomberg Surveillance Early Edition. As Sweden and Finland drop plans to join NATO this hour, we're going to be speaking to the man who oversaw Estonia's accession to the alliance. That's former President Thomas Hendrik Ilves. Send in your questions, IB plus TV Go. Well, good morning and welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Let's get your check on markets with European markets up and open for about an hour and a half. We're nearly flat, not a ton of action, at least on the headline level, on the benchmark level. There's been a lot of back and forth this week, a lot of concerns, be it emanating from the U.S., be it higher yields. But we did get that red-hot UK inflation number. We've seen yields move higher, 8 basis points on your gilt 10-year yield, selling off with the prospect of the BOE giving them ammunition to be really aggressive when it comes to taming this inflation. We're also looking at Brent crude. This slipped into positive territory, up 0.4% after the IEA's latest release when they lowered their demand forecast given the COVID lockdowns in China. We were just speaking to the IEA earlier, Tyrell Bassoni over there saying that the market looks more balanced. Finally, the yen, 20-year low versus the U.S. dollar. That's all about the yield differential. Kyoto reporting that the Japan finance minister saying that the sudden FX moves have become problematic. So at the moment, it's just jawboning. We'll see whether there's more intervention in this market. So to the U.S., where markets are continuing to digest that U.S. inflation data and what it means for Fed policy. President Joe Biden says he's doing everything he can to lower consumer prices.
But even as we work with Congress, I'm not going to wait to take action to help American families. I'm doing everything within my power by executive orders to bring down the price and address the Putin price hike.
We're joined now by Andrew Ball, CIO for Global Fixed Income at PIMCO. Andrew, I'm going to take us across the world and look at what RBNZ did today. So they hiked by 50 basis points. Most economists didn't see it coming. But I got to say, Andrew, the market reaction was one that was a bit more muted than I had originally expected. A lot of the moves that occurred, they came back in. So I wonder to what degree this is a market that's all hawked up, that is prepared for hawkish central banks, even if many economists aren't.
I think that's right. And if you look at what markets are pricing in, I mean, markets are pricing in, very significant tightening cycles. In the case of the RBNZ, as they said, kind of a stitch in time saves 9. If they do more now, that may mean that they do less later on. So, they went 50 basis points. They may well go 50 basis points at the next meeting to get ahead of this. But it doesn't necessarily mean that you should move up your higher end, terminal rate expectations.
Is there a degree to which then, Andrew, that the market has just gone too far?
Well, I think it depends where you look. I think in Europe, so closer to home here, the market's pricing quite a lot for the ECB. It's difficult to compare with the past cycle because we had a European sovereign crisis in the past, but the market's pricing in, pretty restrictive stance, I would say, over time for the European Central Bank. If you compare it with the US, yes, you're having some overshooting versus neutral rates, depending on your neutral rate forecast for the Fed. So some tightening there, but I think that could definitely go further in the US. And when you look at underlying inflation in Europe, the headline number is certainly high. The core inflation number is nowhere near as high as in the US. So much more of an energy story in Europe. So I think it depends where you look. I think it's plausible to think that the markets could price in more for the US over time. Europe, you've priced in a lot. For the RMBs and RNZ, or Australia looks pretty reasonable, and then the UK is interesting because more than some of the other central banks, the Bank of England has looked at the the growth implications as well as the implications for inflation coming out of the Ukraine conflict.
If I could just focus us in on the U.S. for a moment. And by the way, I've been getting a lot of flack for saying RBNZ today, so at least you're saying Zed. When you look at the U.S., Bullard wrote an opinion piece in the FT saying that it's a bit of a fantasy in current central bank policy that neutral, just getting to neutral, isn't putting enough downward pressure on inflation. It's just ceasing to put upward pressure on inflation. At what point do rate rises, does the overnight benchmark borrowing cost actually start to rein in inflation?
Well, so I think that's right, that given where inflation is, given the tightness of the labor market, the Fed is going to need to slow the economy. So the Fed is going to need to go above neutral. The Fed, I think, has about 2.5% for their assumption for neutral rates. We're probably a bit below that, but it seems perfectly plausible to think that 100 basis points or so above the neutral rate would be not such a big call. And then you need to look at overall financial conditions as well. The policy rate is important, chiefly in terms of the impact on longer term rates, credit spreads, and overall financial conditions. So as I said, I think you can price in some more tightening in the US. In the funds I manage, we're positioned for that, and outright tightness. Okay. But then you do have to think, there's a lot of tightening priced in for this year, and so you do need to look at the impact on growth further down the line. The shape of the yield curve gives you that indication as well. So it's a tricky path between the Fed doing what it needs to do and the risk of slowdown or recession risk in next year, say.
A tricky path. That is certainly probably the sentiment for literally everything happening in the world right now. Andrew, really great to have you on today. Andrew Balls, CIO for Global Fixed Income at PIMCO. Thanks so much for joining. Now, President Joe Biden has, for the first time, accused Russia of committing genocide in Ukraine. His comments mark a major escalation of his condemnation of Moscow's invasion.
I call this genocide because it becomes clearer and clearer that Putin is just trying to wipe out the idea of Ukraine.
At the same time, President Vladimir Putin has said peace talks with Ukraine are, quote, at a dead end, and has vowed to continue Russia's invasion.
As for the progress of the operation, I often hear questions if we can do it faster. We can. It depends on the intensity of military actions. The intensity of military actions is related to losses, unfortunately. Our goal is to achieve all objectives, minimizing losses.
Joining us for more on this is Bloomberg Senior International Affairs reporter Mark Champion. So, Mark, the president's language has changed, the U.S. president using the word genocide. What's the significance of that?
Well, it really is the last word that you can use against another country. And what it really indicates, I think, is that from both sides there's a recognition that this is not going to be resolved by talks anytime soon. And as you just heard, President Putin said yesterday that the peace talks are at a dead end. And on the U.S. side, that's more or less the same recognition and an understanding that, for the immediate future, at least, this is going to be resolved on the battlefield. And so you had the U.S. Pledging another $750 million worth of weapons to Ukraine and saying that it would fast track them, get them there as fast as possible. You have European leaders saying, similar things, not about the amounts of money, obviously, but about the need to get stuff to the front line in Donbass within the next couple of weeks. You had President Putin there talking about, the balance that he has to think about in the speed of the campaign. But it's all about resolving this on the battlefield.
Mark, there have been rumors, claims of a chemical weapons attack in Mariupol. How do we really judge these claims? What do we know about them?
Well, it's extremely difficult to confirm anything because of where it took place in Mariupol on the territory of a factory where some of the defenders have retreated to really make a last stand. And so they're obviously encircled under fire, and it's impossible to get access to get samples, to get doctors to look at the victims and test their blood and so on to find out what was used, or indeed to just find out if anything happened, since this is a claim that's made by the soldiers there. So yes, very important if it happens, because the U.S. and other Western leaders have pledged to do something in response if chemical weapons are shown to have been used, but very difficult to prove.
Mark, thank you very much. That's Bloomberg's Mark Champion giving us the latest update on Ukraine. Coming up, Finland opens the door to a NATO application. We'll be joined by the former Estonian President Thomas Hendrik Ilves to discuss that next. Send in your questions, IB plus TV Go. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the House for business's greatest minds.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Finland is set to kick off a process that will likely lead the Nordic country applying to join NATO. The government is expected to sign off a white paper today on changes to the nation's security environment following its Russian neighbor's attack on Ukraine. We're joined now by former President of Estonia, Thomas Hendrik Ilves, who oversaw Estonia's EU and NATO accession process. Thomas, thanks so much for joining. So 100 miles, less than 100 kilometers away from Tallinn, a nation is undergoing the same process that you did back in 2004, joining NATO. Given your experience overseeing that process, what is the significance of a Finland who's a member of NATO?
Well, I mean, there are a number of massive changes underway. First of all, I mean, both Finland and Sweden have rejected NATO membership since NATO was founded in 1949. And we've seen that 6 weeks of Russian aggression has changed 3/4 of a century of security policy. Clearly, what happens, if these countries join, it would mean that the entire security profile of Northern Europe changes. Right now, the three Baltic countries are, barely tied to the rest of Europe from a security point of view. You can see on the map that there is just this little stretch of land of 60 kilometers between Russia's Kaliningrad Oblast and Belarus, and we could be cut off easily. If you now look at that picture and you fill in as blue Finland and Sweden, NATO becomes, the Baltic Sea becomes a NATO lake, which means that the security, the depth of security changes immensely. And so this is would be an astounding change in the security environment of Europe.
Then there's the question of the Russian response, Thomas. I was struck by a Washington Post op-ed yesterday of Michael Gerson, who served President Bush at the same time that you were leading Estonia into NATO and serving as president as well. So he wrote that the logic that led to Russian aggression in Georgia and Ukraine, aka no NATO in the Russian sphere, would almost certainly lead towards the Baltics. Is this the appropriate sentiment? Should there be fear that Russia next turns its sight on the Baltics?
No, I read the piece, and I don't quite understand the logic because unlike Ukraine and Georgia, we are in NATO. We have been there almost 20 years. There is this thing called Article 5, so that were Russia to try to do something, it would meet the full force of NATO. So I don't quite understand that. And certainly, if anything, the possible membership or the membership of Finland and Sweden would make this even more disastrous insofar for Russia, in that they would have an entire quarter of Europe that they would be engaging in, and NATO would be engaging with troops and material and air from the entire Baltic Sea space.
Does Russia then have a response? What would it be to additional members in NATO?
Well, they're in a tough position, I would say, because first of all, their entire rhetoric has been directed against the so-called new members who have been in since 1999 and 2004, saying this can't continue. And here, their own actions have precipitated a decision on the part of traditional neutral countries to join. So, and each with their own very capable military. So their response, it's hard to gauge. I mean, since the invasion of Ukraine was pretty irrational as well, but I don't really see that it's true that we are next after this. I don't follow that logic.
Yeah, there have been a lot of wrong calls made on the presumed actions of Russia heading into this invasion. I do wonder, though, one of the possible reactions, and we have seen some signs of this, is cyber attacks. Finland, for example, after it started to talk about joining NATO, they suffered some attacks on the government website. Estonia, when you were president, you also saw cyber warfare coming from Russia as well. What would you tell your peers in Finland and Sweden when it comes to cybersecurity in this era?
Well, I think they're actually quite well prepared. I would say that Finland especially is exceptionally well prepared to deal with cyber warfare. We in Estonia and Finland are among, I guess, the two strongest cyber defense powers in Europe at the moment. And so I'm not too worried about that. I'm more worried, actually, I'm less worried about NATO, which I think can handle it than some of the developments in the European Union, which seem to be more designed to weaken cybersecurity, most importantly with some of the new legislation they've adopted. But in terms of sort of direct cyber attacks, I think it would be quite foolhardy to attack Finland. Though I mean, we saw that just the other day when President Zelensky was speaking to the Finnish parliament. The Russians did a massive cyber attack to drown him out. I mean, so we will see this kind of nuisance creating behavior quite a bit, and but getting stronger than that. Well, there will be a window of opportunity between the time that Finland applies and then becomes a full member, in which NATO Article 5 will not apply yet, but that they will be subject to all kinds of harassment.
Thomas, we're going to have to leave it there. Thanks so much for joining. Thomas Hendrik Ilves, former Estonian president. Thanks for joining us. Coming up, UK Prime Minister Boris Johnson says he's paid a fine for breaching the COVID lockdown rules. We're going to have more on that next. Plus, we'll continue the UK inflation story. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
It did not occur to me that this might have been a breach of the rules. But of course the police have found otherwise, and I fully respect the outcome of their investigation. I've paid the fine, and I once again offer a full apology. It's my job to get on and deliver for the people of this country, and that's what I'm going to do.
UK Prime Minister Boris Johnson there, who has become the first sitting leader to be sanctioned for breaking the law. That's after police fined him for attending a rule-breaking gathering during lockdown. Joining us now is UK government reporter Alex Morales. So, Alex, I mean, does Johnson's position look to be in danger after this?
Well, if this had happened 2 months ago, you would have said almost certainly there would be a leadership challenge. The Tory party has a sort of an arrangement whereby people can submit letters to a sort of obscure-sounding backbench committee, but if enough letters are received, that triggers automatically a leadership challenge. And it looked like there was sort of critical mass building towards the number of letters back 2 months ago. But Johnson, in a sense, is lucky by the timing of his fine, because the Tory party have reassessed their own mood, and they think that Russia's invasion of Ukraine changes the situation, and that time of crisis is not time to change your leader.
What about Chancellor of the Exchequer, Rishi Sunak? He has had his fair share of concerning headlines to many, and of course falls under this Partygate scandal as well.
Yeah, I mean, he's had a terrible week, hasn't he? We had all the revelations about his wife's tax affairs last week, that he held a US green card while he was still Chancellor, a whole lot of negative press. And then at the end of it, I think it came as a bit of a shock to a lot of Conservatives that he was fined as well as part of this the Partygate scandal. He had acknowledged already attending this particular event, which by his account was he'd shown up for a work meeting and there happened to be people celebrating the Prime Minister's birthday party. I suspect he was only there for a few minutes, and it wasn't planned by his account. So I think there's a lot of shock that he was fined. There was a big story in the Times yesterday saying that he'd agonized over whether to resign. I'm told categorically that he didn't write a letter, but knowing the Chancellor and the way he is, you would imagine it will have crossed his mind to resign.
All right, Alex, thanks very much, bringing me back to those ambushed by cake days. Exactly. Great to have you on. That's Alex Morales, our UK government reporter, giving us an update. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kaylee Lyons in New York, Anna Edwards in London. Off the back of those hot inflationary readings, you continue to see bond markets selling off, stocks wobbling today. How does that continue? How does the Fed react? This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. it means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We're kind of at a weighing station in the market at this point.
I think broader picture, there's not too much that has, aggressively shifted.
A drop in inflation, a drop in crime, settling Ukraine would all make a big difference.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, April 13th. Our top stories today. Searching for the shooter. New York police name a person of interest in the subway station shooting that left almost 24 people injured. For the first time, President Biden accuses Russia of committing genocide in Ukraine. The U.S. is now preparing another massive package of military aid for Ukrainian forces. And JP Morgan kicks off earnings season for Wall Street's biggest banks. Investors will look for the impact of inflation and volatility triggered by the war in Ukraine. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, a bit of resilience in global risk assets over the past 24 hours. I imagine, though, anybody commuting at this early hour in New York in the hours ahead, their thoughts probably elsewhere this morning.
Yeah, after that incident with the subway shooting yesterday in Brooklyn, Anna, and we will have updates on that in just a moment. Let's first, though, get the update on these markets. As Anna alluded to, a bit more risk-on sentiment taking hold today. You actually had the MSCI Asia-Pacific Index higher after a 3-day losing streak. It was up about 0.7%. A leader within that was Japan. Japanese equities aided by a weaker Japanese yen. Actually, the Japanese yen at its weakest level against the U.S. dollar in 20 years, going all the way back to 2002. North of 126 after BOJ Governor Kuroda reiterated his commitment to easy monetary policy. But actually, even with that move, the Japanese yen isn't the weakest currency against the dollar in G10 FX today. That actually belongs to the Kiwi. The New Zealand dollar weaker by nearly a full percentage point, trading around 67 cents or so, even after the RBNZ hiked rates by 50 basis points, its biggest interest rate increase going back 22 years. Traders, though, in FX and the bond market seem to be betting that maybe the tightening won't be as aggressive from here because you're actually seeing a bid coming into the short end of the curve in New Zealand. That 2-year yield down 14 basis points to just 3.1%, Matt.
I like the Z. Kaylee, that must be a Virginia. That must be a Virginia thing. I'm taking a look at S&P futures right now, about 2/3%. We closed the cash trade down 1/3% yesterday, so a little bit more optimism creeping into markets today. The 10-year yield rises as investors let go of that debt, 2.7595. So really a similar level to what we were looking at this time yesterday, but still relatively high, of course, the highest that we've seen since the end of 2018, beginning of 2019. NYMEX crude WTI back up over $100 at 197, even as the IEA says that the drawdown in Russian production wasn't even half as bad as they thought, as Russia finds buyers for its oil. Bitcoin up 1.6%. So maybe this is a risk-on indicator, 40,177. I know they said the same thing yesterday, but we're gaining by a little bit more today, and the correlation remains strong. Anna, what do you see in Europe?
Yeah, we see a mixed picture here in Europe, really, Matt. We have some markets outperforming because of their sectoral structure, if you like. The London market, certainly one of those. The French market also. The German market underperforms today. Let me show you what's going on energy stocks, because you see the London market is in green, and that is in part because of that strength we saw in energy prices in the last 24 hours. Today, more stable, but we're still talking about $100 on WTI, 104, 105 on Brent, and so that moves those energy stocks a little bit higher today. LVMH in the luxury sector, that is boosting what's going on in Paris, up by 0.9%, but the numbers well received by investors. The geographical spread playing to the advantage of this business, even though there are concerns, of course, around war in Europe and the lockdowns, COVID-related over in China. The business in the US and in parts of Europe managing to be pretty resilient, and so that stock goes higher. This is the UK 10-year yield, and the yield is going higher, and this is all connected to the inflation story globally. You've got 40-year highs on inflation in the US. We've got 30-year highs on CPI here in the UK, and that, of course, has got a lot of people thinking about what the Bank of England does next. This is the last inflation print that the Bank of England will get before it makes its next decision in the month of May. And Tesco, this is the biggest grocery retailer in the UK, gives us a really interesting indicator of how that inflation impulse is passing through the economy. They've had to put up wages. They talked about how they might find it difficult to keep prices low, and that's what their business model relies on. And they've also said they'll take a hit to their profits as a result. Matt remembers the tagline, and that's the Tesco share price moving more than just a little, down by 5%. On the Russian asset side of things, we've got the stock market down by 0.5%. The ruble on the move, around 2.5% movement here. Interesting that President Putin was citing resilience in the ruble yesterday as a demonstration in his eyes of how the Russian economy has withstood the attacks of sanctions from the global community. And the Russian 10-year bond yield in here as well, because we are going to hear from the CDDC in the coming days. Then, Kaylee, they're going to review those payments that were made in rubles last week. There were two of them. They were not made in dollars, but in rubles, and they're going to review whether that equates to a default, a conversation we will pick up later on in the program with an emerging markets voice.
Absolutely, Anna. So that's one thing that we're watching today. As for what else is on the agenda in the day ahead, JP Morgan will be kicking off big bank earnings. It reports at 7 a.m. New York time. We'll also get U.S. PPI data at 8:30 a.m. Eastern. And finally, U.S. Treasury Secretary Janet Yellen will be speaking to the Atlantic Council on the future of global economy and U.S. economic leadership. Matt.
All right, now police in New York continue searching for what they call a person of interest in the shooting at the Brooklyn subway stop yesterday. 23 people were injured, 10 of them shot by a suspect who hasn't yet been apprehended. The NYPD commissioner spoke about it.
We are truly fortunate that this was not significantly worse than it is. At this time, we still do not know the suspect's motivation. Clearly, this individual boarded the train and was intent on violence.
Our own Kriti Gupta reporting live from the scene for us yesterday. She joins us now for more. And even though, Kriti, yesterday it felt like we weren't getting the information we needed quickly enough, it really was a pretty fast-moving investigation from the incident at, 8:30 a.m. yesterday to the name that they published yesterday, I think around 5:30 p.m.
Yeah, it took all day, but essentially a lot of it came from what they found at the crime scene, actually, essentially at the subway platform, which I still believe is still an active crime scene. It has not been cleared to resume service yet. And really what they found was allegedly the gunman's belongings. They found a 9mm handgun. They found 2 undetonated smoke canisters. That was some of the reports we were hearing early on in the morning. There were undetonated devices within the subway station. But also remember, he had released 2 smoke canisters already on the subway car. When the subway doors opened, the smoke kind of fled into the platform. What they did also find among really a barrage of weapons here was also 33 shells fired as well. So you said 33 rounds, of course, injuring 10 people, or with a gunshot wound. Other injuries were there as well. They also found a key to a rented U-Haul van, and that's really where they found the name of this person of interest, Frank James. He is 62 years old, black male, about 5'5". It's unclear whether he is actually the shooter that they're searching for or what the connection is, but he is a person of interest, and that manhunt is still ongoing.
Well, and obviously, Kriti, this is where our attention was focused yesterday in the city of New York. In the state of New York, though, the events of yesterday really overshadowing some other events, and that was the Lieutenant Governor, Brian Benjamin, resigning after being indicted on a bribery charge. Where do we stand with that this morning?
Well, he has officially resigned, and Kathy Hochul was very vocal about. She's the governor of New York, of course. She was very vocal about saying that we don't support these allegations. The prosecution saying that from 2019 to 2021, he was obtaining corrupt campaign donations from a real estate developer, essentially promising to use his authority as a state senator to obtain $50,000 of grant money that he later claims went to children in Harlem when it comes to school supplies. Nevertheless, that is what prosecutors are alleging. He did plead non guilty, so we don't know what the verdict is yet, but so far that does mean he's out of the campaign race.
Chrissy, thank you very much. Bloomberg's Chrissy Gupta with the latest on those happenings of various kinds in New York. President Joe Biden has, for the first time, accused Russia of committing genocide in Ukraine, as we get back to the geopolitics, significantly escalating his condemnation of President Vladimir Putin's invasion. This, as the United States is said to be readying further military assistance worth about $750 million for Kiev. Anne-Marie Hordern, Bloomberg Washington correspondent, joins us now from D.C. Anne-Marie, a quite significant step up in the language being used, the non-diplomatic language being used here between, well, by President Biden in this case, and a step up in funding for the Ukrainians.
Yeah, really twofold yesterday coming from the White House in terms of their condemnation and also support for Ukraine. So first, let's go to that phrase, genocide. The president said this in Iowa when he was giving talks about trying to lower fuel costs that have also risen because of the war. He said your family budget, your ability to fill up your tank, none of it should hinge on whether a dictator declares war and commits genocide a half a world away. Now, this is a word his administration has not wanted to use and has refrained from using. So journalists asked following that up, Mr. President, is this what you meant? He said, yes, I called it genocide because it's become clearer and clearer that what Putin is trying to do is wipe out being Ukrainian. Now, he says he'll leave it to the lawyers internationally, but to him, that is what it looks like. And it comes as we have reporting that the United States will be having a drawdown and sending military weapons to Ukraine, $750 million worth. Now, the way they're doing it is through a drawdown where the president could just have this order to send it directly and not get congressional approval. This really speeds up the process, given it's a wartime. But we should also note this just adds to the nearly $2.5 billion of weaponry that's been sent from the United States to Ukraine.
Continuing to provide that support. Bloomberg's Anne-Marie Hordern in Washington, thank you so much. Now, speaking of Russia, the International Energy Agency has lowered its forecast for oil demand. It says measures to curb the spread of COVID-19 in China are a major reason for its move. The IEA's head of the oil market division spoke with Bloomberg's Danny Berger earlier.
This follows mostly the lockdowns in China. But already in last month's report, we made a much bigger revision to our oil demand outlook stemming from higher prices, lower economic growth. And we're seeing now that economic forecasters continue to downgrade their outlook for the world economy. And obviously, this will have an impact on oil demand.
Let's get more now with Danny Berger, who conducted that interview. Danny, what else did she tell you?
Well, I think it's really fascinating just how fragile this market is, that the threat from oversupply to undersupply is very acute, depending just on, what month it is. So in terms of the China slowdown, basically I had asked her there, do we have a threat of oversupply of oil? And she said, yes, okay, there is this demand picture slowing now, but going forward, there still is this resumption to normal post-COVID. And at the same time, Russia oil supply is about to be reduced drastically. We're already seeing that process start now. So she renewed her call that OPEC needs to step up and put more oil on the market. Of course, that call has yet to be heeded by OPEC. Part of the reason also Russian oil supply coming off the market is this continuation of self-sanctioning. Now, we learned that Vitol, the latest to really do this, one of the biggest merchant traders of oil, saying that it wouldn't renew any contracts with Russian suppliers. And that means by the end of the year, it will no longer be trading in Russia-originated crude and other materials. Basically, they had just had pre-existing contracts, so this isn't a huge change in tone for them. But it does come off the back of a Zelensky advisor writing to Vitol saying, don't receive Russian oil anymore. And at the same time, this just adds to the list of various companies, various firms who are no longer operating in Russia, no longer touching Russian crude. BP, Shell, Exxon, all pulling back on their operations. So again, this self-sanctioning leading to cuts in what Russia is putting out there on the market, Matt.
Yeah, absolutely. But the cuts aren't as drastic as had been expected, right? We were looking for a 3 million barrel a day drop, and now it's been brought down to 1.5. Danny, thanks so much. Danny Berger there reporting on oil for us. Let's get to banks, because JP Morgan kicks off Wall Street earnings today for the big banks. It's followed by an avalanche tomorrow with Citi, Goldman Sachs, Morgan Stanley, and Wells Fargo all reporting at once. Plus, Bank of America comes out on Monday. Bloomberg Shanali Bassett covers Wall Street for us, and she joins us now for more on what's expected. So you're going to be a busy beaver over the next few days.
More tomorrow than today, but JP Morgan's results will be very interesting. It will be a sign of exactly how much loans are growing, and growing in the face of a potentially slowing economy. You have analysts already factoring in for potential stagflationary forces on the banks, of which JP Morgan is expected to be hurt by that the most, according to Goldman Sachs. But listen, Matt, there's so much divergence expected because of the drop-off in the trading business. Remember, JP Morgan, something interesting was that they were the biggest counterparty to the world's largest nickel producer at the center of that big nickel short squeeze. At the same time, that's on the downside. On the upside, they're a huge inflation trader as well. So there could be a lot of divergence in the numbers here, and really the comparative results will be interesting.
Charlie, we heard from the St. Louis Fed President James Bullard, who's been saying that rates need to be raised faster or policymakers will end up risking their credibility. He made these comments in the Financial Times, and they're just another sign of backing for aggressive moves to tame inflation. What do banks want to see here? Because banks for a long time have said that interest rates are low and they would benefit from rates being higher, but perhaps they don't want them to go up too quickly.
Yeah, that's exactly right. And it's not just the yields themselves. Remember, banks will benefit from higher interest rates overall, but not if it really stifles demand meaningfully for loans. This month, we do see debt underwriting come back for corporations in a very big way, but that could be front-ending what we might see in terms of rate hikes later this year. There's also the issue of the yield curve, Anna, and if the yield curve remains very flat, this could wipe out billions of dollars from the bank's net interest income collectively. Right now, there's not really an expectation that that will happen, but people are certainly watching closely, and banks are telegraphing what that ultimate hit will be.
All right, Bloomberg Shanali Bassett, looking forward to your reporting throughout the next couple of days. Thank you so much. Now let's take a look at some stocks moving in pre-market trading here in the U.S. We were just showing on the screen, but I'll mention for the benefit of our radio listeners that you do have shares of JP Morgan higher ahead of those results. And the Financial Select Sector SPDR ETF, which basically gauges how the group as a whole will be trading in early hours, is up by about 0.7%. That stock falling lower, though, is PayPal. News breaking overnight that Walmart has poached PayPal CFO John Rainey to be Walmart's new CFO, and the stock is lower on that news, down about 1.4%. Another stock that is moving to the downside this morning is Albertsons, of course, the grocer. It reported yesterday its profit outlook for the full year disappointing, facing a lot of margin pressures due to higher food prices, due to higher labor costs, due to ongoing supply chain issues. The stock was down 8% on that yesterday. It's lower by another 3% before the bell this morning, Anna.
Kaylee, just a quick word on what we're seeing coming through from Japan. We've seen real weakness in the Japanese yen of late, and that continued today, a move down of 0.6% in just today's session. That's the dollar with the yen. The Japanese Finance Minister Suzuki is speaking in Tokyo and saying that sudden FX moves are very problematic. Will they stop at this verbal intervention? Will there be any kind of intervention of another kind? We have a great voice coming up to talk about the weakness in the Japanese currency and interest rate differentials. Vasilios Giannakis joins us as head of European FX strategy at Citi, but no doubt has some thoughts on what's going on over in Asia as well. And Bitcoin's new spiritual leader, how Jack Dorsey is setting himself up for life after Twitter. Read more on that story in today's Big Take by typing NI Big Take into your Bloomberg terminal. Plus, on the shooting in Brooklyn, we'll be speaking with New York City Mayor Eric Adams. That conversation at 8:30 a.m. in New York, 1:30 p.m. in London. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Season is coming.
It's been a particularly difficult quarter.
What is the forward outlook for companies?
Bloomberg is fastest with the numbers and analysis.
Where is the value here?
There are opportunities out there.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio and Bloomberg TV. Actually, it's like a triple cast, right? Because you can see us live on Bloomberg.com as well. So that's pretty awesome. I'm Matt Miller here in New York with Kaylee Lyons. Anna Edwards is out in London. I'm looking at small business pessimism, and the pessimism has gotten much worse with inflation. There's also a lot of other stuff going on, of course. We just came through the pandemic. We've got a war raging in Ukraine, supply chain and chip shortages, and of course, higher and higher prices. It's probably not just small businesses. As we kick off earnings season, I want to bring in Justina Lee from Bloomberg Markets to help us understand what we should expect with all of these headwinds as companies start to report. Justina?
Right. I think what your great chart kind of shows is that people are really worried about stagflation right now. Because on one hand, we have prices going up because of supply side factors. But on the other hand, you know, like businesses are worried about, will consumer spending be able to hold up? Will they be able to raise prices enough? And I think, you know, that chart was about small businesses, but that really is the concern that's hanging over this earnings season right now.
Justina, good morning. And that chart was about US small businesses. I wonder where the concern around stagflation really falls. Is it in the US or is it really around the Eurozone and certain Eurozone economies?
I mean, that's a great question because I think the concern is certainly much more acute for Europe right now. I mean, that's partly just because Europe is, you know, closer to Russia, more exposed to businesses there, and also at the same time, much more reliant on like Russian energy. And I think we're kind of really seeing that right now. I think I read a comment from one of our stories today about, I mean, a recession in Europe is really what people are already talking about right now.
And we'll get ready to hear from the ECB on that note tomorrow. Thanks very much to Bloomberg's Justina Lee. For more market analysis, you can check out MLIV Go. That is the function to use on your Bloomberg terminal to keep up to date with the Markets Live blog. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Now, keeping you up to date with news from around the world, here's the first word. In China, another sign that COVID lockdowns are disrupting port operations and having an impact on spending. Imports unexpectedly fell last month and export growth slowed down. Imports declined 0.1%, the first drop since August 2020. Exports grew 14.7%, beating estimates, but still slower than the rise in the first 2 months of the year. In the UK, inflation jumped more than expected last month to a 30-year high. Consumer prices rose in March at an annual rate of 7%, and higher inflation is on the way. This month, there will be a 54% increase in the energy price cap. So what does that mean for the Bank of England, for fiscal policy, and for the British pound? We'll have that conversation coming up. Vasilios Giannakis, Citi's head of European FX strategy, will be joining us next. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah
ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Police in New York are searching for what they call a person of interest in the shooting at a Brooklyn subway stop. 23 people were injured, 10 of them shot, and no suspect has been caught yet. Detectives are looking for a man who rented a U-Haul van found at the scene. For the first time, President Biden is accusing Russia of committing genocide in Ukraine. That's a significant shift from his previous position. Meanwhile, the U.S. is now preparing another massive package of military aid for Ukrainian forces. And in finance news, JP Morgan kicks off earnings season for Wall Street's biggest banks. Investors will look for the impact of inflation and volatility triggered by the war in Ukraine. The deal-making boom slowed during the first quarter. That leaves big banks set to post a slump in revenue from that particular business line. I'm Anna Edwards in London. Matt Miller and Kaylee Lyons, of course, with me in New York. And Matt, what is in focus for you as we head into the start of the US day? We've had incredible US inflation and UK inflation.
Yeah, well, there's a lot going on, a lot to process, especially after yesterday's attack on the subway. But in terms of the markets, when we completely divorce ourselves from the issues here in New York City, we have a risk-on day. S&P futures are up 0.5%. The 10-year yield is rising as investors feel comfortable enough to let go of that debt. 2.7653%, so still at kind of the same levels we saw yesterday, but that's the highest since the end of 2018. NYMEX crude had bounced back a little bit. Now it's coming down, but it's over $100 for WTI. Remember, just 2 sessions ago, we were looking at a 93 handle, and Bitcoin is back up today as well, 1.5%, but it's still at a relatively low level compared to what we've seen over the last week. So 40,116. Remember, this change is from midnight tonight. Of course, Bitcoin trades 24/7 all the time. And right now, it's off a little bit from the bullish push that we'd seen over the past few sessions. Kaylee, what do you see in terms of the pre-market?
Well, you're seeing that lift in Bitcoin today, and of course you're seeing a lift in technology stocks now for a second day. Relief continuing to come in to this sector in particular. The likes of Apple and Nvidia are higher in early hours. Apple up by about 0.8%. Nvidia, the chip maker, up by about 1.3%. Also higher, another group of stocks, and that would be the banks. Of course, JP Morgan going to kick off earnings season in just between an hour and an hour and a half from now. JP Morgan Chase unchanged relatively in pre-market trading, but the financial select sector SPDR, which gauges how the sector is doing as a whole in the early trade, is up about 0.7% as we all wait for those results, Anna.
Yeah, we have a little bit of downside coming through here in the European session, a bit of a move lower, I should say here. We've got the Stocks Europe 600 down by 0.2%. Some weakness in Germany meets some resilience in the French market and in the London market. The London market helped by those, generally speaking, higher oil prices that Matt was referencing, even if they are a little bit weaker today. So some of the oil majors go higher in London. LVMH was adding a boost to the French market, although even that stock coming off a little down now by 0.3%. This is a business that's that's impressed investors really this morning, well, last night and this morning European time, with its resilience in terms of geography. Yes, there are questions about how the business performs in China into the future, but in the last quarter it seemed that they were quite resilient in the US and Europe, and that offset weakness over in China. The UK 10-year yield, we continue to see those yields go higher. 30-year inflation highs here in the UK. That was the way we started our morning here in the European time zone. And Tesco, the UK grocery store business, and a really interesting illustration of how difficult this inflation environment is for some businesses. They've been talking this morning about how, yes, they're putting up wages. They're going to find it difficult to keep prices low in the current environment, and that is going to be a hit to profits, and the stock down by 5%. Oh, and in fact, Matt, before I forget, let's go on and have a look at the Russian assets, which I shouldn't forget to do. We've got Russian assets, equity markets moving lower. We've got interesting focus by President Putin himself on what's going on with the ruble. He's talking about how this is a sign for him, the fact that the ruble is now not up at 150, 160, it's down at 82. He says that this is a sign of the resilience of the Russian economy, even if his own government expects a contraction of some 10% in the size of the Russian economy this year. And interesting to watch Russian government debt. Of course, we're going to get the CDD then, Matt, saying whether they think that the Russians have defaulted on their debt. We saw a couple of payments coming through in rubles and not dollars in last week's trading period. So we'll watch the CDC with interest.
So that's the Credit Default Determination Commission, is it? Something like that,
That is.
Right? All right, cool.
Yes.
Very interesting stuff. I want to focus in on the yen. Anna, you were mentioning earlier comments from the Japanese finance minister, Suzuki, who said, you know, these extreme moves, kind of calling out comments from Trichet 20 years ago. It's the speed of the move which is concerning. He doesn't want to comment on the level of the yen, but these quick moves are something that they're definitely monitoring. As Kaylee was telling us over the past few days, we've seen the yen trading at pretty much a 20-year low. Now it's actually gotten there, and we're looking at, what, 126 and change right now? There's a pretty sweet chart. For those of you on radio, listening on radio, we're looking at a chart that goes all the way back to the late 90s, all the way back to really the first Nirvana record, and that's the last time we saw levels like this. Vasilios Giannakis, European head of FX strategy at Citi, joins us to talk about what this means for the Japanese economy and for, you know, central banks on two different paths. Vasilios.
Hello, Matt. Yeah. Well, look, as far as the dollar yen is concerned, the moves that we've seen are largely being driven by U.S. yields. I mean, the correlations between dollar yen and the yield spread, which is pretty much driven by the U.S. yield, has been nearly 1 or so over the past month. Do we think dollar yen goes higher from here? I think it goes a bit higher on the back of higher U.S. yields, although I think that it has become quite a crowded trade right now, so I'm not entirely sure the risk-reward argues to initiate fresh longs here. Now, in terms of monetary policy paths, look, I think there's currently a somewhat different rhetoric coming from the BOJ and the FinMin. And I think that we're not currently at levels that we are going to prompt actual FX intervention. If history is any guide, potentially we need to gravitate 130 or plus to actually start seeing a high probability of foreign exchange intervention. But let me say this, the last time that the Japanese intervened to prop up the currency, to prop up the yen because of excessive weakness, it was, you know, more than 3 decades ago or so, if memory seems right. And it didn't actually work on its own. It had to be assisted by U.S. intervention as well.
Right, and Vasilios, does this kind of verbal intervention, then, this doesn't stand to work? I mean, what will matter is when the BOJ changes policy.
I think there is a combination of a stretched positioning and stretched moves alongside some verbal intervention, which is likely to cap or make the trajectory much flatter compared to what it was. But I don't think that it's going to have a very lasting effect, verbal intervention and so on.
Okay, now some people tell me that the pros watch Euro yen, which takes me nicely into a conversation around the ECB, Vasilios. Where do you expect the ECB to land its commentary this time around? Is this going to be quite a hawkish ECB, or are they going to be waiting to see just what damage is caused to the Eurozone economy by the war?
I think it's going to be quite a hawkish ECB. I think the ECB is far more concerned right now with inflation compared to concerns about growth. And the other thing, which I think the market narrative that we've had over the past 6 months or so should start shifting. Inflation now is not being driven just by supply side shocks. Inflation is also being driven by resilient demand, and resilient demand is just as in the Eurozone, it's globally. And don't get me wrong, there are risks. Single biggest risk is China right now. But the reality of the matter is that we have very tight labor markets, and we have high household savings ratios. And these because consumers were actually forced not to consume. So with inflation where it is, and going back to the starting point, we have a depo rate at minus 50 basis points. The ECB is still purchasing assets. I think that we're going to have a hawkish ECB meeting. I think Lagarde is quite likely to leave the door open to ending asset purchases at the end of June and potentially July rate hike.
Okay, and they're committed to that sequencing of asset purchase ending and then rate hikes. Kayleigh, jump in.
Well, Vasilios, while we're talking about inflation, obviously that's one equation for the ECB. Meanwhile, in the UK, 7% the print we got this morning. What's your base case for the Bank of England and therefore the pound?
Very good question. I think the BOV is, of course, likely to hike in the May meeting, but I think it's also quite likely to start taking a pause in the second half of the year. There are a number of reasons for that. First of all, we started seeing weakness in the numbers, and one can equally say that for the Eurozone, but the starting point is much different. We do have 125 basis points of a difference between the current rates between the central banks. So from that perspective, I think the market is quite aggressive in pricing in 135 to 140 basis points for this year. So I think as we go into the May meeting and potentially later, we're going to start seeing a divergence with the BOV repriced lower and other major central banks either staying where they are or potentially repriced a bit higher.
Maybe the market's with you then. 1:30 and little change is where we are on cable this morning. Vasilios, thanks so much for joining us. Vasilios Giannakis of Citi. We thank him for his time. Coming up on the programme then, Tim Ash, Blue Bay Asset Management, Senior Emerging Market Sovereign Strategist. We will ask about what's happening in Russia, about debt payments there. We'll also talk about Sri Lanka and whether we learn anything of a global nature from what is taking place in that country. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
My team has been in touch with Mayor Adams, the New York's police commissioner, and the Department of Justice and the FBI are working closely with the NYPD on the ground. We're going to continue to stay in close contact with New York authorities, and as we learn more about the situation over the coming hours and days.
President Biden speaking yesterday on the Brooklyn subway shooting. And of course, that followed the president joining New York City Mayor Eric Adams earlier this year in New York to talk about getting guns off the streets, highlighting a string of violent acts that have gripped the city. Anne-Marie Horder, Bloomberg Washington correspondent, is back with us from D.C. for more. Anne-Marie, last night, Mayor Adams, Eric Adams here in New York, tried to frame this as a broader American problem, saying that this shooting is part of just a string of violent shootings, gun violence hitting cities across the U.S. So the question this morning isn't just what Eric Adams is going to do about it. What is President Biden going to do about it?
Well, this shooting comes just 2 days after the president had an event to discuss gun violence. This event, though, was talking about going against these so-called ghost guns, these kits that you can take at home and assemble a gun, and then potentially they become absolutely untraceable. And it also comes as this administration is under pressure due to what Americans think their handling on crime is. So there's really two main issues the administration is facing as they head into the midterm elections, and that is inflation and crime. And what we heard from the president this week is that they're trying to go after more on ghost guns, things they can do from the administration point. But of course, obviously, if you really want to go into legislation of guns, that is going to go to Congress. And there's obviously very different feelings about what to do with guns when you talk to Republicans and Democrats on the Hill.
Yeah, well, we've reached a point technologically when where anyone with a 3D printer can build a gun at home. So that's not going to be traceable or stoppable, I think, but can be made very illegal, of course. Anne-Marie, we're going to talk with Mayor Adams later on today, and I'm very much looking forward to hearing what he has to say about that. He's sort of front and center in the fight against guns, certainly in New York City, but he's a voice, I think, that's important to hear all over the nation. Of course, President Biden has put up legislation on this issue as well. And President Biden, I notice, also accusing Vladimir Putin of genocide. Now, some people see this as a big shift in his stance, but I feel like he's already called him a war criminal and a butcher and asked for him to be put out of office. So, you know, how much different is this?
Well, it is an escalation of the tone and the rhetoric, because individuals in his administration, when you ask them, have said they haven't quite they wanted to go that far and use that term just yet. But the president had said this yesterday when he was talking about lowering fuel costs. He said your family budget, your ability to fill up your tank, none of it should hinge on whether a dictator declares war and commits genocide a half a world away. This was obviously welcomed on Twitter from President Volodymyr Zelensky of Ukraine. But it is a step up in rhetoric. I mean, just last week, Jake Sullivan said that we have not seen that level of systematic deprivation of life of the Ukrainian people to rise to the level of genocide. And now the president stands by that remarks, because reporters asked him right away, and he said, yes, I meant to say it, and this is why. And he says, of course, the international courts and the lawyers will deal with the logistics of the term, but he says, as far as I see, that is what is happening in Ukraine.
Anne-Marie, thanks very much for the update. Bloomberg's Anne-Marie Horder on all things going on in Washington. Let us stick with the international agenda, though. Timothy Ash, Senior EM Sovereign Strategist at Blue Bay Asset Management, joins us. And a really good time to have you on the program then, Tim, and we'll start our conversation in emerging markets around Russia. We've seen a couple of payments then last week made in rubles where recipients were expecting to receive dollars. Of course, Russia will argue that it's not defaulting and has said it will take legal action if it's stopped from making payments by international sanctions. What are you watching for next on this particular story? I mean, whose view really matters here? Is it the CDDC? Is it ratings agencies, although they've stepped aside from Russia?
Well, S&P, I don't think have yet withdrawn their ratings. I think the other two have. We're expecting them to give a determination. Remember, the OFZ bonds that had to be paid, they were ruble bonds to be paid to foreign investors in rubles locally. About 40 days ago, there was no grace period. Amazingly, ridiculously, I think, the rating agencies gave them a 30-day free grace period. They haven't paid. They're in default. That's the fact. They haven't paid bondholders at the time required in the document. They haven't paid them in the currency as required in the document. that's a default. And you know, on external debt, it's clear OFAC are pushing Russia into a full default unless they get out of Ukraine. And I mean, for Russia, this is going to be a devastating blow over the longer term because it'll be very hard for them to come out of default.
Right. So I was going to ask you about the longer-term impact of this, because even before the invasion of Ukraine, even before war in Ukraine, a lot of market voices were telling me, no, look at the ruble, look at that, look at the Russian stock market. Don't worry too much about Russian debt because, you know, they haven't relied on international debt markets perhaps in the way that some other economies have. And yet you think this is going to have long-term significance into the future for the Russian economy?
Look, this is a paradigm shift. You know, it's a systemic crisis in global security, in European security. You know, why Biden has called it genocide in Ukraine. I think many people agree with him there. And the response from the West has been reflective of that. I mean, these are seismic sanctions. You know, the fact that OFAC is pushing Russia into an actual default. I mean, Russia may have thought it was Fortress Russia, but when its assets are frozen, when it's forced into default, you know, that makes it very difficult for policymakers in Russia to manage through this crisis. And it's not, sorry?
No, well, I was just going to say, we still see the ruble. I'm looking at 82.50 right now, Tim. Is that a legit
This is not
quote?
A market. It's not a market.
Okay, I wonder, you know, if European governments are actually just paying Putin in the exchange rate that he determines, if that's part of it, or if market makers are just, you know, not making markets correctly.
I mean, this is not a liquid market. I mean, there are significant capital controls. I mean, try trading ruble in size. You know, almost impossible, right? So, I mean, it's a fixed, manipulated exchange rate. It doesn't bear any resemblance to reality. It's a PR stunt by the Kremlin. The fact is that Russia, you know, is in default. You know, will remain in default for a very long time, and that will have devastating long-term consequences on Russia because it will not come out of default quickly.
Right.
It will not be like '98, where bondholders were able to negotiate with the Ministry of Finance to bring them out of default. Unless, you know, Putin gets out of Ukraine, there'll be no negotiations about coming out of default. So, you know, it means high borrowing costs, lack of foreign capital, lack of investment, low growth, low living standards, capital flight, and brain drain out of Russia for a decade. That is the reality.
Grim. Okay, we get that part. I want to ask you about something that's also grim, but I guess unrelated, or maybe not. In Sri Lanka, for weeks, we've seen civil unrest there, demonstrations, riots even, and now a default as well because they don't have enough dollars on hand to pay for food, fuel, and to service their debt. So they've stopped the latter. Is this related to the, you know, war-caused inflation, or is this a problem that's been brewing in Sri Lanka for a long time anyway?
Oh, it's the latter. I mean, I think most investors are surprised that Sri Lankans lasted so long. I mean, they should have gone to the IMF two years ago, and they should have done a debt restructuring 2 years ago. This is about bad policy choices made over many years. You know, basically a fundamental lack of competitiveness, a public sector. You know, they raise too little in taxes, they spend too much. I mean, the interest burden from public debt is 70% of tax receipts. That is not sustainable. So in a way, you know, the crisis in Ukraine with higher food and energy prices is kind of the straw that broke the camel's back. But policymakers should have recognized the problem 2 years ago. There were solutions. It was a head in the sand kind of approach. The positive is that, you know, they now recognize the problem. We have a new credible central bank governor. They are talking about going to the IMF, and they are talking about a debt restructuring that hopefully should give this country a better perspective going forward.
Okay, thanks so much, Tim. Thanks for joining us. Timothy Ash, Senior EM Sovereign Strategist at Blue Bay Asset Management. Coming up, we will be talking to Professor of International Affairs at the New School, Nina Khrushcheva. That is at 8 a.m. in New York, 1 p.m. in London. Really interesting conversation to tune into, given her family connections. This is Bloomberg.
Falling energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to Bloomberg Surveillance. This is the early edition. We are continuing to watch the Brooklyn shooting situation. Police have named a person of interest, Frank James. They've released a picture of him on Twitter. They haven't called him a suspect yet, but there is a manhunt underway here in New York, and I imagine in the surrounding area as well, for this person of interest, Frank James. Anna?
Yeah, a person of interest there. Back to the markets. We're focused on equity markets, a little bit weaker here in Europe, but from a macro policy perspective, interesting to watch the Bank of Canada. Will it become the first G7 country to hike by 50 basis points, by 0.5% when they make their decision later today? This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
no two ways about it. Inflation is high. Inflation is too high for the Fed's comfort level.
Inflation's a product of both demand and supply. And yes, demand has got to slow down.
That demand destruction will happen, at some point. The Fed's going to be raising rates because the economy looks good, and they have runway to do so.
The question remains, really, can the market still go higher?
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. We welcome you on radio and television to a city in shock. So much to talk about today. Foreign exchange on the move, J.P. Morgan earnings, Kayleigh lines in for John Farrow. But there is only one story in the city of New York, and that is a shooting on a subway. What we want to do is start the morning. We're going to have Kriti Gupta with us in a bit here. Futures up 11, Dow futures up 78, but really pushed aside in New York City by the sound of sirens through the night. Lisa, what an exhausting night.
Exhausting after a city that's already been beset by a series of crises with the pandemic, trying to revive, trying to get its subway back to where we were, creating this feeling of what's next. And I think that that's the fear, Tom.
You see a lot of tense phone calls. I witnessed that personally. Our Paul Sweeney on the phone to family in Brooklyn in real time yesterday morning. Kayleigh, it braced the entire city, and this city is in shock this morning.
Yeah, and you could see it anecdotally yesterday, the lines for ferries, for buses, the traffic that I saw in lower Manhattan as people either couldn't use or were avoiding the subway, Tom. And it raises a question, as Lisa alluded to, this is just the latest in a series of events.
Yes.
Violent crime in New York up 44% year to date, raising the question of what does Eric Adams, the mayor, do from here, and what does the Biden administration do from here as well?
Bloomberg Surveillance will speak to Mayor Adams later this morning. Of course, he's recovering from COVID. Let's do this, folks. Let's start with the data check. Lisa has an important brief on an incredibly busy day for economics, finance, investment, and then Kriti Gupta will join us here in a moment. Equities with a lift this morning. The VIX 24 comes into 23.78. The headline story for me is the dollar, and you see DXY out to new recent strength. I looked at all sorts of series, and most importantly, trade-weighted yen finally shows the weakness many have expected to see, with dollar yen one part of that trade weight, 126 handle, now euro weaker as well. So foreign exchange really front and center. Brent crude, $105 a barrel. Lisa, advise on the morning.
It's actually a really busy day, and this is really where we get the earnings kickoff that we've been waiting for. J.P. Morgan starting it off around 7 a.m. We're not sure exactly when it will come out, followed by the 8:30 a.m. call. This follows a pretty big drop in J.P. Morgan shares year to date, down about 16%. And today in pre-market, wavering around. How much does the look ahead to the economy during the rest of the year highlight strength? Or does it highlight what we are seeing in survey after survey, which is consumers who are starting to pull back because prices have gotten too high and they are not willing to pay them? 8:30 a.m. we get U.S. March PPI data. This follows, of course, CPI yesterday. The headline number yesterday came out above expectations, but it was read as below expectations because of that core figure. What do we see from PPI expected to surge well above 10% year over year? How much can we see some of the supply chain disruptions? How much can we see the war in Ukraine affecting prices, affecting outlooks, and frankly, what does that mean in terms of profit margins and also in terms of prices for consumers on the other side? At 10 a.m., the Bank of Canada is meeting. I actually am watching this pretty closely. You are seeing the Canadian two-year yields surge to around the highest in a long time. You're also seeing the idea that people are looking for a 50 basis point rate hike, as well as balance sheet runoff. It would be the first of the major developed market banks to do this. How much is it basically just catching up to a Fed? And this goes to the dollar story, Tom. Basically, anything that other central banks do, is that just catch up to the descendant economy that is the United States.
If you look at, Lisa, the litmus paper of the global system is foreign exchange, and particularly into IMF World Bank meetings next week and our trip there tomorrow to speak to the managing director. Foreign exchange is a signal of a system, Lisa, and it's just simple as that. strong dollar disrupts.
Yeah, and that's what a lot of people are worried about right now, Tom. And I think that, it is fair to look at the IMF meetings as, frankly, a platform where they're going to say, what are we going to do about higher food prices? What are we going to do about the inflationary inputs in countries that don't have the momentum to withstand it to the same degree that the United States does?
Thanks so much. We welcome all of you on Bloomberg Radio and Bloomberg Television, where we touch on the violence in New York City. Of course, all worldwide attuned to this, but we must remember that there is so much other violence. The city moves on a Wednesday morning, and at 12:43 a.m., of course, the New York Post on the Crime Watch, 3 dead, at least 12 wounded in a series of New York City shootings, all of that after 4 p.m. yesterday. It speaks to the crime that Kaylee Lines just spoke of New York City. Here on the specific crimes committed yesterday, Kriti Gupta. Kriti, at this site, what was this key observation you saw yesterday?
Well, what was interesting was simply the armed police presence, and this really comes into just how much police presence there is when it comes to subway stations. There's a rule here in New York City that their officers have to conduct routine checks every single morning, and the problem here was that although those routine checks were conducted for this particular station, which for our international audience is significant, this is really at the cross-section of a lot of morning traffic going into the city from a very residential area of Brooklyn. This time around, there were no officers present, and on top of that, surveillance cameras allegedly malfunctioned.
I want to go to that. Let's get an update right now on this Wednesday morning. You and I and all heard the sirens nonstop last night across these 5 boroughs. We're looking for a person of interest. Where is he?
We don't know that, and we also don't know what his connection is to the actual gunman right now. As you pointed out, it is a very specific person of interest. We are looking for Frank James. He is 62 years old, connected to the crime scene by a rented van, keys that were left at the crime scene to a U-Haul rented van that has addresses going to Philadelphia and Milwaukee. And Tom, that's all we know for now.
We're going to talk to Mayor Adams today, and I've got to start with the attention to detail and the stark reality here. For whatever the history of crime is and the history of rights, London has almost 5 times as many surveillance cameras is New York. London way behind all of it, in China, totalitarian regime. I get that as well. But was there a shock yesterday in your reporting of surveillance cameras that CBS News says were working, but the electronic and digital distribution of those cameras flat out failed?
Well, one of the other issues was also how are they going to address that problem? Because immediately the first reaction was, where is the New York City spending on infrastructure, especially when it comes to these subway stations, which, Tom, to be frank, are crumbling across the city. A lot of the questions also was, how is the police going to target essentially the absence of these surveillance cameras? And the way they did that was through social media, and they did that through good old-fashioned knocking on doors. And that's immediately why you saw in the hours that followed a 20-block perimeter and a 17-block spread out when it comes to tracking down the person of interest.
Kriti, the lack of maintenance, some of the increase in crime, a lot of people have been looking toward the rebound of the city post-pandemic, and frankly, the difficulty in doing so given the budget deficits, as well as just getting people back to the offices and getting people back up and running. How much is that a part of the story right now?
Well, it's a huge part of the story, as you know, and as you and Kaylee both mentioned, that right now New York City is dealing with kind of a return to work, and in a lot of ways it's lagging some of the other major cities in the United States when it comes to coming back into the office 5 days a week, when you have this work from home infrastructure that has actually been created. The other part of this equation is specifically this particular region of Brooklyn. If you don't mind just going into demographics really quickly, this is an Asian American and Hispanic neighborhood where 29% of the people in this neighborhood are under the poverty line. If you shut down the subway station, even for just an hour, there's a massive economic cost, especially at rush hour. Of course, the shooting happening at 8:24 a.m. yesterday. So the question here was, what is the economic impact, and when will we get these subway lines back online?
Kriti Gupta, thank you so much. Anne-Marie Hordern is in Washington, a Bloomberg Washington correspondent. Anne-Marie, I'd love to get your sense of how much the Washington community is focused on this, not from the perspective of New York City and our New York City-centric bubble, but in terms of crime and Biden's perception of overseeing a nation where crime in cities is going up at a significant pace.
Well, it was just about a month ago where the White House put out a fact sheet talking about the crime that has gone up and the gun violence that has gone up. This administration has constantly called it an endemic of gun violence in this country. And it was after the shootings in Colorado and Georgia that the president told Congress to start focusing on this and pass legislation. You're also seeing it from the Hill
to the White House. A number of individuals, even Democrats, especially the likes of Senator Chris Murphy of Connecticut, recently in an interview with Politico, and this is an individual who spent a lot of his time after, of course, the devastating Sandy Hook shooting in Connecticut on trying to pass gun legislation, asking the administration to make this a more urgent issue. And given that you just have this Brooklyn shooting yesterday, and we are leading up to the midterm elections, this will become a focal point.
But you mentioned Sandy Hook, Anne Marie. Sandy Hook changed nothing in the legislature, and this is just one in a series of mass shootings we've already seen in the month of April here in the United States. Is there really going to be any support for more bipartisanship on this issue? Does one more shooting really matter?
It's a great question because America has been here before, time and time again. Sandy Hook was just one of them. It's almost countless and hard to recall how many shootings there have been in America, and yet legislation does not change. So this will become definitely a midterm issue, especially as Democrats, who are much tougher on gun control and want to outlaw guns, will try to make this really a home issue, and especially this will become an issue for suburban women, especially individuals like mothers who want to make sure that their children are safe at school and are not going to be in the streets where there's lots of guns.
Promise, Anne-Marie, we'll continue this discussion near the 7:15 moment of Bloomberg surveillance this morning. A Nation Riveted, I noticed in Chicago the number of deaths last year, 797 homicides, maybe leading the way. I don't have that exact statistic nationwide, but certainly front and center this morning. And again, the mayor of New York scheduled to be with Bloomberg surveillance later this morning. There'll be some interesting, tough questions. Much to speak of. Futures up 15, Dow futures up 101. The VIX comes in 23.74. A constructive equity tape. In the bond market, a constructive churn off of the inflation shock yesterday, 2.80 down to 2.73 on the 10-year yield. But the news this morning for global Wall Street is the ascendant dollar. The yen finally gives way with international ramifications. The Ministry of Japan speaking on that matter in the recent hours, 126.02 on yen. Please stay with us this morning. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The Biden administration is preparing a military aid package worth roughly $750 million for Ukraine. The president is allowed to transfer equipment from U.S. stockpiles without congressional approval in order to speed up delivery during an emergency. The U.S. has provided more than $2.4 billion in military assistance to Ukraine since President Biden took office. Police in New York are searching for what they call a person of interest in the shooting at a Brooklyn subway stop. 23 people were injured, 10 of them shot, and no suspect has been caught. Detectives are looking for a man named Frank James. Keys found at the scene belonged to a U-Haul van that James rented. Police don't know if he was the shooter. In the UK, inflation jumped more than expected last month to a 30-year high. Consumer prices rose in March at an annual rate of 7%, and higher inflation is on the way. This month, there will be a 54% increase in the energy price cap. And the International Energy Agency has cut its forecast for global oil demand this year. That's after China reimposed those lockdowns to contain the spread of the coronavirus. Plus, a number of IEA members, led by the U.S., have released oil from their emergency stockpiles. The world's largest seller of luxury goods defied disruptions from the war in Ukraine and a resurgence of COVID in China. LVMH posted strong revenue growth in the first quarter. Sales were up some 23%, led by Louis Vuitton and Dior. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is coming.
It's been a particularly difficult quarter.
What is the forward outlook for companies?
Bloomberg is fastest with the numbers and analysis.
Where is the value here?
There are opportunities out there.
Bloomberg, the fastest numbers and analysis you trust.
Even as we work with Congress, I'm not going to wait to take action to help American families. I'm doing everything within my power by executive order to bring down the price and address the Putin price hike.
The President of the United States managing the message around 8.5% inflation, again, a constructive core statistic trend, and maybe that gave a lift to the market tomorrow. But nevertheless, President Biden with a policy plate full on this Wednesday. Very quickly here, Lisa Bramwitz, BlackRock out. I love the way they show organic growth, and they got double-digit ETF. It's an interesting stew, isn't it?
Well, the ETF flows often don't necessarily indicate how much dominance their earnings have, since a lot of those are not necessarily high-income, high-fee-producing things. Kaylee Lyons and I were trying to understand why it said that first quarter fixed income net inflows were $7.5 billion versus an estimate of $36.1 billion. You can see shares up about 0.3%. And this does come on earnings per share that came in at $9.52 versus the estimate of $8.79.
We will tear that apart with the number of employees that BlackRock has. Let me get that up here right now. It's shocking how small the firm is given the mass for Global Wall Street, 18,000 employees versus 250,000 for many of the big banks. Right now, our conversation of the day on the equity markets, Benjamin Laidler joins us, global market strategist for eToro. Ben Laidler, do you reaffirm your sterling 3-year call of a bull market in equities?
I think so. I think the surprise of this sort of tough first 4 months of the year actually has been how resilient equities have been. When you see what's been thrown at them, I think they've held up very well. And I think from here, we're really spring-loaded for just a little bit less bad news. I don't think we're going back to sort of sunlight and rainbows, but I think a little bit less bad news, whether that be what we priced it on the Fed, whether that be on inflation, which we may have started to get yesterday, whether that's on oil prices. You tend to make most of your money quickest in markets when you get a little bit a little
Ben
bit
Laidler,
less bad news. And I think that's the narrative for this quarter.
your morning note is piercing. I have to go to it. And with yen now at a 126, with government officials in Japan talking weak yen, you are up on the table pounding your feet saying Japan is the forgotten market. How cheap is Japan equity right now?
Yeah, it's pretty much the cheapest of the major equity markets, maybe along with sort of Europe right now, but there's definitely a value case to be made. And, this weaker yen, the authorities may be concerned about the pace of that yen weakness, but I'm sure they're secretly applauding the absolute level. I mean, this weak yen sort of really helps the export competitiveness of Japan, and it really helps corporate profits, and it's traditionally helped Japanese equities. And I think, you sort of put it together, this sort of cheap valuation, this more competitive currency, this, as I say, forgotten market. I mean, this is the third biggest economy and equity market in the world, and we never talk about it. I think for those that maybe were in Europe and are now sort of scared off by all the risks, whether it's oil, whether it's Ukraine, I think Japan has a lot of the positive characteristics of Europe without an awful lot of the baggage right now.
Ben, Tom asked a really good question earlier. He did really well, if he was wondering. How long can the dollar remain ascendant before something breaks?
Yeah, I mean, the dollar's been on this sort of remorseless grind, but it has been a grind. I mean, we've certainly seen much bigger dollar rallies historically. I think we're probably coming to the end of it right now. I mean, you look at the two ingredients to this, this risk-off aversion, which I suspect slowly eases, and this big hawkish move by the Fed, which I think we've priced an awful lot in here. So I think the dollar's going to stay well bid, but I think we've probably seen the sort of worst of the move. So, look back dollar yen. I don't think the yen's going to weaken from here, yes, but I think you've seen sort of the most of the move. And, similarly, I think goes for sort of this remorseless dollar move we've seen so far.
Well, Ben, as you just alluded to, the focus by and large has been on these broad macro issues, the war in Ukraine, inflation, the hawkish monetary policy response on the part of central banks. It's going to start getting more micro with JP Morgan reporting in just about half an hour from now, Ben. How low is the bar for earnings this season?
Luckily, I think it's pretty low, right? I mean, we've beaten earnings for the last sort of 4 or 5 quarters. It gets more and more difficult every quarter, but I think we're set up for another one. I mean, the market's looking for earnings to fall 5% versus last quarter. Remember, and these are nominal earnings. This is despite all the inflation, despite the real GDP growth, despite the reopening economy, despite corporates, passing on a lot of these cost increases to sort of you and I in prices. So I think the bar's set very low for 5% earnings growth in the US. I think we're easily going to beat that. And I think this is a key reminder that actually life is not quite as bad out there as maybe we would like to believe. And I think this is, again, one of the ingredients of this sort of less bad second quarter. And I hope markets respond positively to that.
Ben, how much of your call that things are about to get less bad for equities is predicated on things being less bad for the bond market? Have we seen the worst of the pain in fixed income, and therefore higher yields won't put more pressure on the equity market?
I mean, there's been some pressure from the bond market, but on broader equities, but really it's been a big rotation. I mean, more than pressure on the whole equity market, it's been this sort of big rotation out of growth with a capital G into, slightly cheaper, areas of the market. I do think we've seen the worst of the bond move, at least in terms of the speed. But a lot of this is with the Fed, right? I mean, they're controlling both the short end of the yield curve, but also increasingly the long end of the yield curve now with this unprecedented balance sheet roll-off.
Ben Laidler, I have to leave it there. Too short a visit. And again, congratulations on the mother of all bull market calls coming out of autumn of 2018. Mr. Laidler with eToro. Lisa, we've hardly touched on Ukraine, of course, with our focus here on New York City. And folks, we continue to monitor this search for an at-large person of interest in New York City. I want to go back, Lisa, to the Napoleonic Wars and drag it forward. You can do that with Sweden. This is a stunning report from our Jonas Ekblom in Stockholm of a Sweden, and particularly the political party against joining NATO, EU, other defense issues, finally throwing in the towel and saying, yes, what's key, Lisa, is they speak of a parallel process with Finland to the east between Sweden and Russia.
You characterized it well. They were the holdouts, right? Now the Social Democrats in Sweden coming out and supporting inclusion in NATO, highlighting really how much of an about-face NATO has really done given the war in Ukraine and, frankly, the offensive of Russia. And this actually, a lot of people have been saying, is one of the most miscalculated aspects of Vladimir Putin. He thought that NATO would not come together, and it's been exactly the opposite in response to the conflict.
It's interesting to see how it will grow out. Kayla, you've been following this story, and it's not just about Ukraine to the south and the Black Sea. There's a huge debate across the Baltic Sea, isn't there?
Yeah, and there's the question of how much there is spillover risk as you see an escalation of Russia's aggression in Ukraine. What threat is posed to other countries? And does this get closer and closer to NATO territory? What's the response from the alliance then?
The Bloomberg headline, Sweden's Social Democrats favor applying to NATO in June. Coming up in about 20 minutes, JP Morgan earnings.